Hey traders, it's James here from the A1 content team, and as we start today's stream, I want to share with you some exciting news from our friends over at FX2 Funding. FX2 has just launched their two-stage evaluation. The two-stage differs significantly from their one-stage, offering many benefits to traders. First of all, the profit targets are much more manageable, with 8% in the first stage and 5% in the second stage. Next, you'll get a 10% fixed overall drawdown that does not trail your account balance. You get all these perks on top of FX2's existing world-class customer service, high-performance technology, and a choice between two amazing trading platforms, CTrader and DXTrade. There's a reason FX2 Funding boasts a Trustpilot rating of 4.7 in this time of industry turmoil. They are a serious company run by seasoned business professionals and always take conservative steps to protect their traders. For traders looking to get funded, you can use promo code A1Trading15 to save 15% on all funded accounts. That's A1Trading15. The promo code can be found in the link in the description below and in the live stream chat right now. Now, on to the show.
All right. Good morning, guys. Welcome back to another live stream. Happy Thursday to you, and hope you're all doing well. We're coming in on, well, just about 10-15 minutes to go here to our event of the day in terms of news. Well, it is the event of the day, but I'm curious if we have anything else. Yeah, so you have GDP numbers, the final GDP numbers, and unemployment claims coming out in just about 10 or so minutes, which we're going to be taking a look at some charts and prepping for this news event. Later on today, we also have pending home sales. We've had a lot of home sales data recently, and it is a very interesting topic, you know, even if it's a little bit self-serving. I'm interested in purchasing a home. I've talked about that on the stream before, and I would like to see some movement in the home world. When I say movement, I mean more affordability, and you know what that might entail is first home sales slowing a lot, the economy slowing down a little bit, and then perhaps Fed rate cuts that can get the housing market moving again. We'll see. Anyways, this morning we have, first up is the final GDP numbers. Now, if you're new to GDP numbers, here's how it goes. You have advanced, preliminary, and then you have the final. Okay. And also, I forgot to play my intro music. Hold on. Intro music coming in. Boom. So with the final GDP number coming out today, final GDP is actually not as important or not as exciting than advanced GDP. Why? Well, advanced GDP is like the early look at what the estimated GDP figures are going to come in as. And so that's like the most exciting. People always are looking, like the most forward-looking stuff is the most interesting. Like when the Fed dot plot comes out, or they guide for the next, 6 months or something like that, that's more interesting to financial markets than, when it actually comes time to make a decision, because the market is always kind of on to the next thing. So as we talk about the US dollar, and we talk about stocks, and we talk about currencies and gold and things like that, it's always about what is coming down the pipeline, not kind of what's behind us. And so when it comes to GDP numbers today, will they move the market? They could. It all depends as to what the actual number comes out to be relative to the forecasted figure. So the forecasted figure today is 1.4% quarter over quarter growth. If you get 1.3 or 1.2, that would be a disappointment for the US dollar, right? That would cause the dollar to likely move lower, show some slowdown in the economy. And conversely, if you got a higher than expected read, that would show strength relative to forecast, what the market was expecting. Remember, we talk about this often, but for these news types of streams, people sometimes wonder when an event comes out and there's not a lot of volatility, or there's a ton of volatility one way or the other. It's always like, it's always about how different from expectations was the news. Because if you get something very surprising, then it will cause movement. But if you get something that's not surprising, again, this is what the market expects, 1.4. So if you get something different, and it often is different, if you get something significantly different, it could cause the market to really spike one way or the other. We don't know what this number is going to be, and I never try and claim what I think, I don't make investment decisions or trading decisions based on my hunch or best guess as to what will happen with final GDP numbers or unemployment claims or NFP or CPI. What I personally do is I look at the numbers after they come out and I trade them. I don't trade the spike. I don't trade, I don't scalp events like this. I find that to be incredibly difficult. There are some traders who can do that. But for me, what I like to do is I like to look at the story that these figures incorporate into the overall kind of idea of the market. Now, when we talk about the overall market idea, that's why we built this tool, the Edge Finder, which you guys have probably seen me talk about 7 million times. The Edge Finder takes into account everything from like sentiment, like the commitment of traders data, what institutional money's doing, retail positioning. It's looking at seasonal trends. It's looking at GDP figures like we're going to get today, PMI numbers, retail sales. It's looking at all of this. Sorry, I just hit my mic. I hope that didn't break anybody's ear. So it's looking at all these figures, all these numbers, and it's tallying them up as bullish or bearish for your favorite currency pairs, commodities like gold, silver, oil, indices, etc. And we've built this algorithm to look at this data and interpret, generally speaking, mark something for the bulls or mark something for the bears on each one. So today, GDP numbers do matter, not only to the market, but for me personally, and how I trade. You trade with the top setups from the Edge Finder. I'm very curious to see how a change, better or worse, for US GDP, how that could impact charts like the Australian dollar on here or the Russell or, each one of these that has something to do with the US. So we're just a few minutes out. I'll be keeping an eye on this page. I'll also, just real quick, I wanted to touch on this. COT data, if you're wondering why it came in a little bit late this week, it's because there was a bank holiday, and usually that sets off the COT report by one day. So we did get the latest commitment of traders data. We do still see gold as a very bullish institutional buy on a net basis, and on a percentage basis, what you can see is 86.7% of contracts are on the long side. That is very, very strong. So yeah, we're seeing gold really, really strong there. The Nikkei, oil, silver, USD, these things are strong overall. On the sell side, on the bearish side, we've got the Canadian dollar, the Swiss franc, the Japanese yen, the Russell, the 10-year treasury bond, and the Australian dollar. So that's the net basis. But what about the individual kind of this latest week data? This is always really interesting to me as well, to kind of see how well on a week over week basis we're seeing movement. So if you take a look at the dollar, this caught my eye. There was a lot of demand for the dollar, a huge surge in buying. You can see they dropped a lot of short contracts, they closed a lot of short contracts, and they added a lot of long contracts. Interestingly, they also slightly bought gold. So they added a lot of long contracts and they added just a little bit of short contracts. Net basis, they bought gold. So they bought gold, they bought the dollar. That's kind of unique and sometimes can be confusing to people. How do they buy gold and buy the dollar? What's the point of doing that? Well, both of these can be considered sort of risk off investments to a degree, but also there could be a bet that, the euro, which got sold heavily by institutional money, could be headed for rate cuts way sooner than the US. And that could make a divergence where, traders, investors, institutional money seems to be selling the euro and going into the dollar. That seems to be the trend recently. When we take a look at price action, we can kind of confirm that idea. At least let's take a look here on the euro, right? It's been moving lower overall. We are seeing a bit of a bounce here today. Again, GDP numbers in just a few minutes will probably give us some volatility on dollar crosses, whether you're trading currency pairs or gold, and also stocks. All of these things could be moving here today. It just depends on whether or not we get a surprise or if we get as expected GDP numbers. I am still long gold. I never got out of my trade. My stop loss was below that 2,300 level. So we've swung back a little bit. We're kind of close to break even, but I am expecting some volatility this morning, and I stick to my plan. If we break this level, I'm out of the trade. If we rally from here, I'm going to try and work with it. So we will see what gets going here on GDP numbers. Again, do I expect volatility? To be honest, not really. But if there's something surprising, if there's something significantly different than expectations, who's to say where gold could go? Gold could be very, very aggressive. I'm again bullish on gold on a technical basis as long as we continue to hold 2,300. If we break that, it's time for me to take a loss and move off from this position. If we can bounce and continue higher, then great. But I am personally still in the trade and still slightly in drawdown on this one. So stay tuned on that. We'll see what happens with gold here. I'm also long silver. Silver, I mean, we're very close to hitting stops, but let's see if 29 can hold. 29 is a kind of a psychological level as well as a nice level of support looking left. We'll see if this one holds. Again, I'm very comfortable if things roll over today, if GDP comes in really strong and it knocks out my gold and silver trade. Obviously, that's not ideal, but it is what it is, and we take the loss and we move on. So I have my ideas set. I have my game plan in stone. I know what I'm going to do in all scenarios, and that's all you can do as a trader. I like the story overall for gold and silver, but they do need to start making the moves on a technical basis in order to keep me in the trade. Otherwise, I've got to get out. So that is my current perspective on gold. Quick look at Bitcoin. I am still long also Bitcoin inside of our VIP room. I shared this notification. This is a longer term trade for me, but I do have a stop loss now below this 50, this kind of spike lower. If we break that, that's going to be a trigger for me to get out. I really like Bitcoin from a momentum trade. If we do see markets push higher in coming, months, if risk on kind of prevails to some degree, Bitcoin, I think, will really outperform. But if it doesn't, again, I need to get out of the way of that too, because in a risk off environment, I don't want to be touching Bitcoin. As a trader, I have the option to get in and out of things. Let's take a quick look at the dollar. And by the way, we're just about a minute and a half out from the event that could be market moving. Again, I'm not sure if it will be or not. It all comes down to expectations versus what actually gets released. So the dollar moving lower, yields also slightly lower, I believe. Slightly lower, but not really too much. Dollar index just slightly lower here this morning, down 0.17% on the day. Here's the thing about the dollar. Depending on what we get, the dollar could kind of turn back and go for a deeper retracement. Or if we get strong GDP numbers, it could push higher. And again, I know you might say, well, Nick, you just said both ways. I don't know what GDP numbers are going to be, but if they come in really strong and we can break through these highs, that'd be a trigger to me to potentially be bullish the dollar and probably knock me out of my gold trade. But if we come in and see some soft GDP numbers and PCE tomorrow, this could be one kind of long lower high. Anyways, guys, we're getting real close to the event. So let me go ahead and switch my screen over here so that we can watch everything at once. So what I've got on the screen for you guys is we've got SPX, US 30, the Dow Jones, the NASDAQ, the dollar, the euro, the pound, gold, and oil. We got breaking news coming in right after this. All right, let's see if we get any volatility from GDP this morning. All right, the GDP numbers did just come out. We see the dollar pushing lower on this initially. Gold also pushing up 23.20. Euro dollar, pound dollar, also seeing a little bit of volatility to the upside. Let's have a look at what those numbers were. We also had claims. So remember, both of these figures came in here this morning. All right, so we had unemployment claims and final GDP numbers come in exactly as expected. We did get a slightly higher durable goods orders and core durable goods was low. So, okay, so overall, everything came in pretty much exactly as expected. And let's have a look at what the market is doing in reaction. We do still see the dollar slightly lower here this morning. This is a move on the 1 hour chart, but in terms of a daily chart move, I wouldn't call this anything crazy. Let's go back to our main view so we can have a look at this. So here's the dollar index. Again, here's your 1 hour chart. Does seem like on a 1 hour chart basis, seeing a little bit of a push lower. Oh, Ivan's got us with the PCE 3.4%. This is, let's do this. FX Street. And let's go continue site, economic calendar. All right. Let's see, do we get some? Yeah, there we go. 3.4%. This came in slightly higher than expected. And yet the dollar down. Interesting. Personal PCE prices. What is this? Why is this different than tomorrow's PCE? Oh, it's PCE and tomorrow's core PCE. Got it. Yeah. So PCE came out. Dollar reacting actually negatively to it. There goes the dollar on a 15-minute chart. So we missed on trades balance. We have GDP annualized at 1.4% for quarter one. For the first quarter, okay. Initial jobless claims came in right as expected. No revisions. Wholesale inventories came in. Let's see, personal PCE came in slightly higher. Durable goods came in lower than expected. Saw a decline in ex-defense durable goods. Revised down on durable goods for the previous. You know, maybe what this also could be signaling, guys, is that the dollar has been pushing up and expectations quarter over quarter. Tomorrow is month over month and year over year. Thanks, Ivan. Appreciate it. Ivan's always got us on lock, by the way. We always have to keep an Ivan around. If you don't have an Ivan at home, I know where you can purchase one. I'm just kidding. So the dollar index again is pushing lower on this. You know what this might be? One part of this, I would say, in terms of a market reaction or a price action standpoint, is the stakes are pretty high. The expectations for the dollar are pretty high right now. What do I mean by that? Well, the dollar's been trending up and other central banks are looking to cut rates. But in order for the dollar to really break through the highs, I don't think you see a massive dollar outperformance if the Fed just kind of starts cutting rates in September. I think that if rate cuts come in September and maybe a second one in November, I mean, if that starts to happen, the story for the dollar to me is not looking incredibly bullish. Now, in the short run, we've had some nice higher lows. We've had some nice pushes. And, you know, we'll have to see if this does put in another higher low and we push up to the 106.4. That is, of course, possible. But for you to really get a break through those highs, to really get a massive jump in the dollar, what do you need? Well, you need other central banks to be cutting while the dollar sees the Fed or the Federal Reserve doesn't see it appropriate to cut rates for some time. If we continue to see that, they're already kind of in that camp, but expectations for a rate cut this year are still on the table. You need to probably get that wiped off the table in order for the dollar to significantly jump. Gold is flying. Let's check it out. Gold up 0.87% on the day. Here's your hourly chart view. We did spike higher initially, giving back a little bit of those gains here. Gold off of a 4-hour chart does seem like it, at least for now, be respecting this 2300 area of support off of the daily chart. This was a pretty key spot. I mentioned yesterday that my trade, of course, really might have been a little bit too early, but we're at least seeing some bounce here on 2300. And if we continue to push higher, that's great. I might be able to stay in this trade. It's too soon to say, though, because, again, we have PCE tomorrow, which will probably move significantly. The price of gold, the dollar, the S&P, so on and so forth. So we'll have to keep an eye on this one. But again, for now, 2300 seems to be trying to hold. And what I'd love to see, obviously, is this thing to skyrocket. But what I'd also love to see in terms of just a constructive price action standpoint is if we drop down to like the 4-hour chart, I'd like to see us start taking out some of these resistance points where we started to see sell pressure come in, right? You saw this big sell pressure here, sell pressure here. I would love from a constructive price action standpoint to see us get up to those areas and actually break through them. That would tell me that, the 4-hour chart looks promising, and beyond just this, we're consolidating on the daily. I think it's too soon to say if you're or know for sure where gold is going. I mean, you never know for certain where things are going, because we're just in kind of a big, choppy, no man's land. So why am I trading it? Well, fundamentally, I do still like the story long for gold. I think that rate cuts are on the table this year, and I also think part of the reason I think that rate cuts could be a bull case for gold is, people might say, well, Nick, they're already expecting rate cuts, so that's not really surprising to gold. Yes, but I think that if you continue to see labor data come in cool, and you eventually see that inflation come down because of a weak consumer, there's the possibility, not the certainty, but the possibility that the Fed is expecting one rate cut. But what if we start getting into an economic slowdown like many other parts of the world? We're seeing that in other places. We're seeing some early signs. If that's happening, then rate cuts might be way more than people think. We might see several rate cuts. And could that lead us into a period of another round of inflation? It could, right? We're seeing some signs that, again, the labor market, job openings have deteriorated a lot recently. Now, I've pointed this out a couple times, but we are reaching just back to kind of pre-pandemic levels. So we're not at a crisis zone by any means in the labor market, but we're trending lower. And meanwhile, inflation, we just had another reading on PCE, which showed some stickiness in inflation. If you get jobs data coming down with inflation staying hot, I will stay long gold for sure, right? To me, that is a potential stagflation story. And part of me just wonders if we look back in a few years, if we continue to see this trend of labor data cooling, the consumer cooling, and inflation staying problematic, especially if you get like a spike in oil prices, is there a possibility that that quote from Jerome Powell when he said, like, I don't see the stag or the inflation, could that age really poorly? We'll see. My point, what I mean by that is, someone asked Jerome Powell at one point during one of his press conferences and said, JP, are we in a stagflation potential environment? And Jerome Powell confidently said, no, we're not. I don't see the stag or the inflation because, him and all of his Fed official friends know that stagflation would be a terrible environment. I don't want that to happen. I'm not praying for that to happen by any means. But as a trader, as someone who's involved in the markets, you've got to be open to what could be setting up. And what I see right now is labor data, the direction is down. Inflation, the direction is sideways. It's not going away, but it's not certainly, going down. So something to think about. I have a portion of my account in gold that I've been trading, obviously. I also have some stocks that I've sold calls against. If the market continues to go higher, then I'll probably continue trading that as well. But yeah, something I'm watching pretty close is this push on gold, this push on silver. Silver really jumping 1.5% today. Oil also is another thing I'm watching very close because this is part of the inflation story. If you get, again, something like this, right? If you get oil continuing to round out, find support, push higher, this is an inflationary pressure. Because remember, I say this almost every day, but long story short, if energy prices go up, so does everything in the store because all of the businesses between you and the oil pump for you to get your box of cereal is the thing I always say. To get you that box of cereal, there's a lot of shipping and trucking and transportation, and those things all use fuel. Fuel is tied to energy prices. So even when you do look at like core PCE, core CPI, you still have to accept that energy prices can be inflationary. So if we see oil continue to rise, that is something that I think is worth having on the radar for sure. Real quick, guys, I do also want to mention that if you are, if you've enjoyed looking at some of the data with me here, we do have EDGEFINDER trials available. You can get 30 days access to the tool. If you'd like to, if you're trying to become better at fundamentals, you need a platform to do so. And there's not very many good ones out there. We have painstakingly and passionately dedicated our company, A1 Trading, to building tools like this. If you'd like to look at things like the commitment of traders data and what retail positioning is looking like, and seasonality tools and economic growth data and labor statistics and inflation data and interest rates data. If you don't have access to this tool, we just dropped a link here in the chat where you can try this out for 30 days. If you apply using that link, someone from our team will reach out to you and give you some details on trying it out for 30 days. So use that link, check it out. We're pretty proud of the tool if you can't tell already, and definitely worth taking the 30-day trial. Okay, so SPX, where are we at? So the S&P 500 is bouncing off of this morning, bouncing off the lows. 5480 got hit and then bounced. I'm also watching the Dow Jones. This one was showing up yesterday. I don't know if it's still on the EDGEFINDER's top setups page. No, it's not. It was there briefly. We had some index ideas showing up on the EDGEFINDER yesterday, and I was looking at them. I actually like the Dow Jones more than the other two right now. If we get a pullback, I really like the setup around the 618 off of this pullback here. This is a daily chart, but I could even show you on the 4-hour. I really like where we currently are. But I'd like to see an EDGEFINDER confirmation. So I'm going to watch for that today. If I get something from the EDGEFINDER showing up, definitely going to keep an eye on that. Again, I like US 30, so the Dow Jones. AUD USD, this is the Australian dollar against the US dollar. This one, let's see, where is it? The Australian dollar. This one is also on my watch list. I mentioned this yesterday. We talked about how CPI out of Australia came in higher than expected. I'd love to see if we can take out these highs. If we do, the Australian dollar actually looks like a nice setup to me for more long side action. Definitely a trade that I'm watching. But again, that would probably entail some dollar weakness coming into the picture. So maybe tomorrow, if we get a surprise in PCE to the downside, maybe we see that push through the highs on the Australian dollar. Maybe we see some follow through, which is potentially really interesting. So I like that setup a lot. And as long as it continues to stay a setup on the EDGEFINDER here, it might be a potential trade for me if the technicals can line up. Again, as I mentioned just a moment ago, if you'd like to try out the tool, I use this every single day on streams to help spot data or go through data. I also use it, of course, to help me find trading ideas that I execute on. Pretty much all of my trades come from the ideas, the kind of incubator, if you will, is the EDGEFINDER. And then I go and I look at the charts and do all my good stuff. All the standard technicals. But again, if you don't have a copy of the EDGEFINDER, also if you're a member with us, if you're inside Discord, you can get huge discounts on the EDGEFINDER. We can set that up for you. If that's something you're interested in, just chat with us on the website. Head over to a1trading.com, use the live chat feature, or if you've spoken with someone on our team before, you can just chat with them and they'll help you out. Okay, here and now we are going to transition to the next portion of the show. We've got our guests coming on, Miko and Marco, for our 8:45 Technical Thursday session. We'll be bringing them into the show in just a moment. Stay tuned. We'll be right back after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, Miko, Marco, welcome back to the show. How are you guys doing?
What is up? Hello.
Good to have you guys back on. Again, this is a weekly session. Also, I got to play my quick soundboard for you guys. Got the John Cena. We're back for another Thursday special with the gang. Dollar index is down 0.25% this morning, 0.25%. It's been on a pretty strong push to the upside, though, recently. I'd love to get you guys' thoughts. Maybe we can go, we'll go reverse order today. Miko, what are your thoughts on the dollar index? Are you bullish, bearish? What do you think?
Yeah, I've been pretty bullish on the dollar. I'm still very bullish as we speak. I do think there is still a good possibility we can see high prices and a push back to the high. Again, I'm looking at a lot of the technicals here on the DXY, and that has been the trajectory for a while now. This is a daily chart. We've made some nice bullish swings, some pullbacks, nice bullish swing again, another pullback. I'm looking at that continuing at least back to that swing high, at least back to major resistance. So I do think there's still a little bit more upside in the tank. Also, I'm looking at the lower time frames as well. We're doing something similar, higher highs and higher lows. So again, as long as we're maintaining this bullish structure, I remain bullish. And if we were to go and break through this low here, then that's when I will reanalyze and maybe become bearish if things look good. But for now, I'm still looking for more upside. So this bearish move we're seeing today, I'm just looking at as a pullback. I do think price will find feet somewhere. We do have some resistance here as a price on high. This will be turned support. So maybe this could be a level that sends price up, or maybe we have a even deeper pullback into this area. But I do think dollar can still see high prices. I'm looking to short euro if it be kind enough to break outside of this range. It has been quite sideways for the past week or so. I'm looking to see if we can break to the downside and find some resistance to plot some shorts from. I was selling pound USD over the past couple of days. However, I just think I've been trailed out. This is where I have my trailed stop loss too. So I think I've just been taking out the trade. But if I do get another opportunity, I will be looking at pound USD as well, coming back into that low there, try and find the short, again, looking for more dollar strength in the market. So I'm very, very bullish on dollar. Dollar crosses, I'm looking for more of the same. And yeah, DXY still looks pretty bullish to me.
Yeah, I would agree in terms of the chart perspective. It still looks like it's supported here. We had that big breakout of consolidation, a few weeks back, and we have been putting in these higher lows, higher highs. If you were a bear, I'd say you probably want to see those sorts of higher lows be reversed. But for now, it does seem like the overall trajectory of the dollar seems higher. This 106.4 level is really what I'm curious about. And I mentioned earlier my fundamental thoughts on what would make the dollar really break out of this. I think you'd probably have to see other central banks cutting interest rates and then the Fed kind of completely pause for the year. That would be what would probably get a big push going on the dollar. So I think that we do have in the short term maybe some more room to go back and retest this kind of upper limit of this recent consolidation. But we'll see if we can get beyond that. I think it would probably need some sort of big green candle on a fundamentals driver, something like that. But same question now to you, Marco, in terms of the dollar index. What are your thoughts today?
Yeah, sure. So let me see my charts. I had to rejoin because got a new PC, so something messed up with Chrome.
Oh, what kind of PC did you get?
Just a MacBook okay. Pro.
Nice.
Yeah, because
That's
I'm
awesome.
usually traveling around, so it's kind of the best option for me.
Oh yeah, it's so convenient. I need to get a better portable laptop. It's so much nicer if you have a good one.
Yeah, it's really good. It's really good. Kind of takes some time to get used to from Windows, but still getting used to it for now. But yeah, it's quick, it's fast, and that's all I need. Okay, yeah. So euro and US dollar for me is kind of flat and range bound on this 1 hour chart, so being more patient. And I had it on my watch list because I had a nice descending channel marked up right here, but now it's not playing out, so I'm gonna remove it from the watch list. EJ is very ascending, so I'm expecting this to reverse. It's going up very correctively. So what I want to see an ascending channel and then something like this to happen. But nothing is forming just yet. Aussie US dollar had a nice liquidity sweep, sell of this top. So identify the flat range and then basically sold the top of the liquidity area. So that was a nice winning trade. And now I'm looking to see again what will happen in these areas. So just selling the top, buying the bottom, 3-to-1 risk reward, fixed stop loss, and that's the game plan for the Aussie and the US dollar. It's looking very flat, very indecisive, which is good for a range bound entry. AJ, most of the JPY pairs are just ascending, heavily ascending, so I'm looking for that downtrend, looking for reversals. That is on my radar. And the pound is pretty corrective in this area. I was looking for potentially some buy setups here, but then some selling pressure started to kick in on the very short term. My forecast is going to be, I'm just looking for large momentum up or down. So being more patient on the pound. And NJ is the final one. NJ is actually looking very flat. It's not like AJ or EJ. This one is looking very flat and very corrective. So being more patient. And that is kind of it for me today. Nothing is on the watch list. I'm waiting for momentum. I am looking for range bound entries on the Euro US dollar and on the Aussie US dollar as well. And I had a question about EDGEFINDER. So is it possible to go back in time and check out like the historical data of what kind of scores you got, for example, like a month ago or 2 months ago?
Yes.
Nice.
Here, let me show you. This is gold since the beginning of this year. You can see all of the that are presented day by day. So I think you guys might remember when I had that. I daydream about it every day, so I'm just a little biased here. But when I had that really bullish setup on gold that I caught here, that just went crazy for a long period of time. That was that kind of territory, that kind of time, and then it was more bearish over here. We track the scores over time. It makes it really convenient for people who like to do like back testing or to test out the concepts of just the different scores.
Yeah, that's pretty cool. I might run it up against my trending entries, see how the scores basically compared to my analysis for that trade, see if maybe it can improve the win rate. Because
if James and Chandler haven't already, we could probably just send you, either of you guys, a copy of the tool. Obviously, you can play around.
Yeah, they did reach out to me, so I'll definitely talk to them about it. Yeah, seems interesting.
Yeah, for sure. I guess next question for you guys in terms of today, we're seeing a big jump in metals off of this kind of morning's report. Again, the dollar moving lower is helping out that story. Gold up 1% and silver up 1.39, 1.4%. So a little bit of update for you guys on my side. I'm coming back from the dead, it seems like, this gold trade. I had a trade that just went immediately against me. And then I'm also long silver, which was like inches from getting stopped out, and still could, if we get, a hot PCE print tomorrow, that could totally reverse this course and go lower. But to me, it actually seems like maybe metals are finding support off of the daily and off of the 4 hour. I mentioned I love that silver trade, weeks ago. Should have taken it then. Shoulda, coulda, woulda. Because I ended up taking it, on a retest of this. It's kind of hard to see on the daily, but the 4 hour chart set it up. Looked like it was setting up. I went long, and I was too early on that one too. So I was early on some of these ideas, but I do still think that metals may have room to move higher. Miko, what do you think? Are you watching metals at all?
Yeah, I'm keeping my eye on silver. Gold, on the other hand, I'm still not a big fan of. I'm still definitely very, very bullish on both of them. I do think longer term, we can see moves back to their highs, but gold has just been a little bit corrective. The thing I do like about gold is that we're still kind of respecting support, which I believe this is kind of like the area you're generally buying from, or at least you have your stop loss underneath. So I think as long as we stay above here, I do think gold will eventually break to the upside. So I do like that aspect, but again, a lot of my entries and a lot of my setups I'm looking at are on the 4 hour, and the 4 hour has been quite choppy as of late. So I want to see some higher highs and some higher lows being printed first before I look to take any entries on gold. And I think maybe we could be turning around. I'll wait and see, but we're still respecting support, which is a good thing. So as long as we can keep maintaining that, I think eventually we'll break higher. If we do break support and things get a little bit tricky. In terms of silver, I'm keeping an eye on silver. Again, with this one, I don't like the fact that we have been in this prolonged kind of bearish move, because we were looking very, very bullish last week, and I thought after that impulse there, maybe some pullbacks look good, but I was expecting momentum to continue us. We have kind of lost some of the confluence with the trend line, which isn't make or break for me. I do like when we have a trend line confluence, and just because we break a trend line doesn't necessarily mean we're turning direction, but it's always good to have that confluence. And yeah, with silver, we are kind of at that kind of support level, which is, if we're going to bounce, this is the time to do it. And if this level breaks as well, it's just not looking that clear for me. So what I am looking for are some higher highs and some higher lows, similar to what I'm looking for gold. Is if we can start printing some bullish structure again, that'd be fantastic, because we have been pretty consistent with these lower highs as well, which again, it just looks like a big correction to me. So if you can start doing this, that'll be fantastic, and I'll look for a breaking retest somewhere to find my entry. So still do think we've got a really good chance of getting back to the highs for both of them. I'm still bullish on both of them, but I just don't have an opportunity which fits the plan yet for myself.
Sure. No, that's totally fair. I would say that, if I'm looking at like the hourly chart on gold, it is just absolutely gross. It's so choppy. It's so back and forth. I've mentioned this, and I think in our last conversation, I'm also very interested in gold kind of from a fundamentals perspective, which is why I excuse like willing to sit through a consolidation phase, because I think that, at some point it will break higher. I could be early, I could be wrong about that, but that's why I have the trade on. So we'll see. Same question to you, Marco, in terms of metals, gold or silver, either one. What are your thoughts on that area?
Sure. So let's do gold. 1 hour chart, seeing a bit of bullish pressure, but nothing much, nothing significant. 4 hour is going to be very range bound, stuck between the low and the high, at least according to my methodology. And the daily is going to be, flat and range bound as well. So kind of looks like Bitcoin, and we had a big uptrend, but now I would need it to break some major levels. So either this high or these lows. That is going to determine a nice uptrend or a nice downtrend. Silver, let me see. Silver. So silver is looking a bit different. Let me start from the 1 hour. Nothing much happening on the 1 hour. 4 hour is looking like it's in a big descending channel. So when I see these types of channels, I do expect the price to reverse in the opposite direction. In this case, that would be to the upside. So for me, I'm looking at a bullish scenario for silver, especially with this strong uptrend on the daily chart going back a couple of months even. So yeah, this may be just a big pullback before the continuation of the uptrend. So I can see how long plays are good for this market.
Yeah, definitely. I when it comes to the metals, just to touch on my fundamental side is, there's a ton of kind of expectations now for globally central banks to begin cutting interest rates, as like for example, like Europe is really seeing a lot of slowdown. So is the UK. These places are seeing it appropriate to start cutting rates. The ECB already did cut rates to kind of relieve some of that pressure. So my point was saying that is that, gold looks at that as, oh, there's going to be more printing of currency. More printing of currency is a bullish thing for gold. If you think about, how much currency it takes you to buy gold, if they devalue currency. So I do like that story for kind of staying long gold. What would make me wrong about that? And I always, I think it's always important, because nobody knows certainly what's going to happen in the markets. what could change that would be like if the US and the global economy kind of just kicks it into high gear, stays strong, but inflation kind of on the supply side comes down. So I don't know, just worth mentioning that there is the potential that gold and silver could of course break lower, but I think that for me and my approach, most likely I think there's upside. Next one I got to ask you guys about, because I actually did take a position, was Bitcoin. So I actually went long Bitcoin. With a relatively small position. I'll show you this here. So this is the weekly chart on Bitcoin. And we've talked about this for so long. And this exact level has been on our conversation for some time. I actually ended up taking a small position here, right around, well, let's see, my entry was right around 60,000. And so I am long with, a stop here on my idea. If price breaks through this swing low, that's completely, time for me to bail on it. But I think that, if we look at it on like a daily chart, it's pretty choppy. It's pretty indecisive. But because I like the long-term story for Bitcoin, because I think that, for me, I could see going to complete zero, or I could see it going to 1 million at some point. I don't know. But the use cases seem to continuously expand. So longer term, I do like the idea of having a little bit of Bitcoin in the account. And this is my first stab at trying to get long on some Bitcoin in, a long time. So I don't know, Miko, what are your thoughts on crypto as a whole? And well, here's a side question. If you were to touch crypto, would you buy Bitcoin, or would you touch something else like Ethereum, or an altcoin, or a collection of altcoins? How would you play it if you were to, do something with crypto?
Well, to be fair, I do have a little bit of XRP actually.
Okay.
Not much, but I think I've probably held it for maybe 8 months now. But if I do look to get involved more with crypto, I probably would go Bitcoin, just because it's the biggest kid on the block, and I think
Sure.
safest one as well. But I think I bought maybe around here somewhere, so pretty much start break even. But yeah, I probably would just look at Bitcoin, and I do think in the future we still do have a lot more upside for Bitcoin, and I'm bullish long term on crypto in general as well. So yeah, I would look at Bitcoin. I'm not so much of a fan of the price we're at, 60K. I mean, of course, like you said, this could be, we could be looking back in the future saying, wow, 60K was so cheap, or we could be looking back saying how 60K was so expensive. But I would like to see a bigger correction, just because of the big bull run we've had recently. Would I think we're going to have that correction? I'm not too sure, because I'm looking at this descending channel, which we've been speaking about. We'll come to the lower end of it, which is kind of where you've got your buy position, and Bitcoin does want to rally. This is a good place for that to happen. So it's a nice place for a push, but I'm not too sure if I want to buy and hold from it in the long run. Maybe a nice swing position, but I think if I want to buy and hold, I want price to come a little bit deeper. Maybe I'm being too picky, but that's just me. So yeah, I'm bullish long term. I do think this is a nice place for potentially some upside. And yeah, I mean, we could see another bullish swing from it potentially.
Yeah, and we'll certainly have to see. I think just from a macro perspective too, like Bitcoin, to me, will move likely in the same direction as the Nasdaq. And if the Nasdaq does kind of continue to see a strong year, I think Bitcoin could actually really outperform if we continue to see kind of risk appetite stay strong. If investors and traders are getting back into kind of the higher risk stuff. I don't know if you guys obviously remember the 2021 time when everybody was going all the way out on the risk curve and going into like NFTs and super risky stuff. I made this reference yesterday, but in terms of like the risk curve, you have like super safe stuff like bonds, and then you have like stocks, and then you have crypto, and then you have like NFTs. That's like all the way out there on the risk curve. And what it seems like we frequently see in bull markets is that people slowly advance on the risk curve, and then it all comes crashing down at some point. But it kind of depends where we are in the cycle. I think right now stocks are like really in favor, and if they continue to be in favor, I think we see the risk curve gain more appetite. But I don't know, just a concept to think about. Marco, same question to you. Bitcoin. What are your thoughts on Bitcoin, and or if you were looking at crypto, which areas would you look at closest?
Sure. So Bitcoin, I'm going to look at a daily chart. Seems to have been breaking down, just moving from the lows to the tops of this channel. But again, overall, there was a big bullish story in the price action. So I'm just looking at the key levels. I have my key levels marked out, either this high or this low, depending on which one breaks. I do not think we're going to just range for forever. I think if we break the low or the high, there's going to be a big move up or a big move down. Do you think it's a bit correlated with gold, or?
I think crypto people would love it to be more correlated to gold, but I don't think it's more correlated to gold. I think Bitcoin is, as I mentioned, frustratingly so for the crypto people, incredibly correlated to the stock market, because the same factors like that we talk about so frequently on the channel. Like if we get inflation that comes in and it's a good news thing tomorrow, Bitcoin's going to rally. But if inflation comes in and it's problematic and the Fed's going to be, not wanting to cut rates for a while, that directly impacts the consumer. The consumer is the one buying Bitcoin. So Bitcoin is, totally, as much as people would love to think it's not, tied up with the rest of the market. And I too wish that it was uncorrelated to the market. I'd love that. I'd love to add another uncorrelated thing to my account and to my trading. But I think it's incredibly correlated, and I hope to see it change from that someday. I think that would be the true bullish case for Bitcoin, is if someday you see it completely diverge from the stock market. The stock market's dropping like a rock and Bitcoin is flying high. But I don't currently see that, and it's hard for me to kind of make that judgment call. But that is a really good question.
So do you find when you're taking positions, if you're already long, let's say NASDAQ, that you're not going to go long Bitcoin, or is it something that you treat separately?
I would say for me, what it would look like would be like, if I'm already long the NASDAQ, depends my size. If I'm like long stocks, I'm probably not going to add Bitcoin. But if I have some positions in the stock market and I have room in my, kind of account for another correlated trade, I could add some Bitcoin as well.
Nice. Cool. Yep. Yeah, that's interesting that it's so correlated with stocks, but it's a risk on assets, so it makes sense.
Yeah, exactly. So we'll see. Again, we've talked about this level for some time. I guess over the next few weeks, we'll see if my trade looks foolish or if it looks good. We'll see how that ends up playing out. Miko and Marco, I want to thank both of you guys for coming on the show, as you do every week. Guys and girls listening, Miko and Marco have their own social medias that we're going to be dropping the links to in the chat right now. Make sure, go hit them up, go subscribe, go follow, support them for helping out. This show, the A1 Trading Show, is intended to be kind of a collaborative space for traders all over the world. And Miko and Marco are regular contributors. We really appreciate them for coming on. And guys, we will see you back next time.
Thank you. See you next week, guys.
All right. And pushing on, we're going to keep going with the show. Just a quick update in terms of what's happening. The S&P 500 slightly in the green today. The NASDAQ, same thing. The Dow Jones slightly in the red. What's new? Underperformance from the Dow. Russell is actually in the green today. So I would say what you're seeing today is a little bit of rate sensitive stuff enjoying the day. TLT is probably going to be up today. Let's see. Is it up? Yeah. TLT making a little bit of a comeback. I'm long TLT. I'm long gold, as I mentioned earlier. And what else? I have positions in the stock market, but I've sold covered calls against them, so my upside is capped on that. But the dollar index coming down here this morning, we'll see if that can stick around or if this is going to kind of make another push for the highs around 106.4. As much as I would actually, for my positions, like to see the dollar push lower, I really would not be surprised if we do head back up to test 106.4. It's not what I necessarily like. I'm not betting that I think the dollar's going higher because I have a mixed view on the dollar right now. But I'm just saying from a technical perspective, I wouldn't be surprised if we do see the dollar push higher. So what we're going to do now is we're going to transition here to our next show host. Last thing I'll say before we do so is remember, guys, the VIP sale is ending. We're currently doing 50% off our memberships. It's the biggest discount that we do all year long. And if you have not already, take advantage. We're going to drop the link here in the chat to get 50% off the VIP membership group. You can get access to all the trades being shared by myself and Frank, as well as Ivan. So when we share a trade, we put it in our Discord channel, and you can keep tabs on what we're doing. And more importantly, why we're taking the trades we're taking. So check that out. Boom, there it is. Click that link. You can find out more by chatting with a representative of our team by clicking that link. All right. Again, real quick, we're going to take just a short break, and then we will be right back with James from Elite Traders. Stay tuned. If you're looking to add fundamental analysis to your trading, then look no further than our software tool, the EDGEFINDER. The EDGEFINDER allows traders to approach the markets by simplifying fundamental analysis into simple scoring systems. We look at economic data, technical readings, as well as sentiment analysis like the commitment of traders data to help traders spot potential opportunities in the markets through the use of data. Our tools allow traders to find top setups each and every day from the top setups page. You can also browse the latest institutional money flow through the commitment of traders data report that we've generated to make it very easy to read. And on this report, you can see everything from the latest overall net positionings, as well as the week-to-week buys and sells from institutional money. The EDGEFINDER also has a retail positioning tool, which allows you to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends, month to month, week of the year, and much more to spot potential opportunities coming up in the future. The EDGEFINDER also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the EDGEFINDER today, and we'll give you a nice live stream discount. Click that link and chat with the rep to find out what kind of discounts are going on right now. Now back to the stream. All right, guys, and we are back. Sorry, I'm hidden behind this thing. Oh, there I am. I've arrived. Hey, James, how's it going, man?
Hey, Nick, how are you? I'm good, thank you.
I'm good. Good to have you back on the show. And just in time, the dollar's moving lower here this morning. We've got dollar down. We've got VIX slightly higher. Gold and silver are making a move up. Yields are falling. Bitcoin and Ethereum are up. Dollar yen actually down on the day. That seems out of the ordinary. But yeah, some interesting moves happening. James, what are you watching today?
Well, we're currently in 4 positions. We've got the Australian Swiss, we've got silver, Euro Australian, and New Zealand Swiss. So yeah, I mean, we're up quite nicely this month, the Elite Traders team. So I'm not really looking to place anything new. It's more a case of now closing out of open positions.
All right, very cool.
So the only thing, I'll just pull it up quickly. The only thing I am looking at is a euro dollar short. So I've been speaking for quite a while about the situation in Europe, specifically France. So we can see here by ING, the French election defensive positioning favor lower euro dollar before Friday's PCE. So I'm looking for maybe a small intraday trade on euro dollar, but that's about it.
Okay, so I'm curious with the euro dollar idea. What are your levels looking like on that? I've got, on my side, kind of just some consolidation here, but some resistance up in this area. We do see the euro moving a little bit higher today. Are you kind of close to a setup idea currently, or what are you looking for?
Yeah, there's something that could play out here. So I think I was last on a Tuesday, and I took this trade just as your stream ended. I said I was going to take this as this candle was closing. So I'm looking for something very similar. It's essentially just waiting for a pullback to a 200 moving average and an overbought RSI, which you can see exactly the same thing here. And then the entry criteria is a bearish engulfing candle. And that's just the strategy to get in for a short-term play. Basically just a technical idea. But in terms of levels, I think it's quite difficult to gauge it on a higher time frame. As you said, it's kind of ranging at the moment. So I'd have to just take a stab at the small time frames like the hourly and play it from there and see how it plays.
Sure. Yeah, I like the setup. I like the moving average kind of confluence there as well. And we'll have to see if the dollar, I was pointing out as you came on the show that the dollar index seems to be kind of trending up on the daily chart. It's pulled back here, and I would not be surprised if it does get sort of a last push here to that 106.4 level. Now, of course,
Yeah.
I've talked about earlier in the stream, I was pointing out that I think that it's possible for us to get there on kind of a technical momentum basis. But then once we get up to this 106.4 level, what I think you need to see would be other central banks, as you pointed out, like Europe, other places starting to cut interest rates. Meanwhile, the Fed kind of wiping the slate clean for rate cuts this year. That would be, to me, the bull case for the dollar. And I don't necessarily think that's going to happen, but I do see the potential for the dollar to squeeze one more time up to that 106.4 level. So we'll have to see if that can play out. Yeah.
Yeah, I think that's exactly the same thing as what I'm looking at. I mean, I don't want to bore you guys with, too many words and bank reports and things, but there is another interesting one here. Investors appear to have hit the pause button for now as they await further data to see if the Fed can cut rates this year. With the US rates market still pricing in about 50 basis points worth of cuts by the central bank this year, investors understandably remain nervous. So going off that, we could expect just lower volatility until we do get that result. But yeah, I think there's quite a lot of focus on the dollar at the minute, and a lot of sort of indecision, I would say, on the long-term outlook, really. So yeah, my idea really is just to go in for sort of intraday trades, and then swing trades will be taken on things like the yen and the Swiss at the moment.
Sure. I like it. Well, what I'll do here, James, is I'm going to give you the floor for a little bit just so you can kind of walk through all of your setups and things that you're watching. So guys, make sure to stick around with James for a little bit. He's going to take over the show. But before I step out, let me just also remind everybody who's listening right now, if you guys would like to go find more information from James, he's got his own services, got his own website and socials. We'll be dropping the link first to his website, elitetraders.io. You can find more information about what they offer, services, that sort of thing. So check this out. We'll drop the link there. There it is. Boom. You can go check out Elite Traders on their website. And James, enjoy the show. You've got it for a little bit, and we'll see you next time, man.
Thank you. See you later. So guys, one of the interesting things I'm looking at the moment really is the dollar CAD. As I said, I'm not really looking for anything too long term, but just based off COT and current price positioning, we can see that the dollar is, it's doing okay. We've got majority long by 70%. The CAD is currently one of the most shorted assets. So it makes sense for dollar CAD to be on the watch list for now anyway. So if we look at the weekly time frame, we've got really nice reaction off this 21 moving average and on this level of support through here. The problem is that the rejection we saw on the weekly was only this wick here. So this didn't present much of an opportunity to get in, because obviously at the time of this, we would have seen a very strong bearish candle and then a flip back up. So not enough to get in. So all I'm looking for now is a second touch down to the support, just to get in for a short-term or relatively short-term play, roughly a sort of 1 to 2, roughly a 1 to 2.5. So that's on the watch list, but it's not, I'm not too bothered if I don't get an entry here. It's one of those things, So that's Euro New Zealand. Not really looking to take this anymore, just because of the way prices reacted around this 50% pullback or the golden zone. It's not ideal. So what we can see is we've got from high to low, really nice level here, which aligns up with the 61.8 and the 0.5 pullback. So it's quite nice. We've got the 200 moving average coming to meet price as well. However, there's a lot of sort of consolidation. I mean, this is the 4-hour chart. So this, these couple of candles here, it's not really showing enough volume or momentum in a bearish direction for me. However, like I said, I'm pretty bearish on the euro. I have been for the past sort of 2 weeks now, or week. So yeah, it's not the best. Jackie, euro dollar. I just covered euro dollar. Feel free to rewind maybe 2 or 3 minutes. You'll see me talking to Nick about euro dollar. Okay, so what else? There's something else I want to show you guys, and it's a technical report. So this isn't loads of words, don't worry. This is a report covering how institutions or large market participants get into the market. And the reason I want to show you this is because I see a lot of talk, mainly on Twitter at the moment, about things, like order blocks, FVGs, turtle soups, and all sorts of stuff. And there's a lot of misinformation about the way the institutions actually get into the markets and the way that they see the markets. They're not on the 1 and 5 minute charts looking for an FVG. They're looking at things like this. So this is, you can see their chart goes back to 2022. They're not looking at small time frames, first of all. They use trend lines. So you can see there's 2 trend lines drawn up. There's percentage of price movements here that they are forecasting or they're looking for. Moving averages, oscillators. There's nothing complex about this stuff. They sometimes don't use candlesticks, they'll use bars. So you can see the open, close positioning on the candles or the bars, whatever you want to call them. So, yeah, I mean, not too interesting, but I just wanted to point this out because, I think it's quite interesting to see that a lot of perspectives and a lot of misinformation out there. So, yeah, just wanted to show you guys that. Moving forwards, there is one last sort of boring thing I want to show you guys, because I've had 16 trades this month and I've still got 4 open. And that sounds like a lot. And I had a conversation with one of my guys last night, and he was saying that, how do you know the difference between over trading and just trading your plan when it shows up? And essentially, the point is this. Now, this is a very, very basic way to calculate your exposure. So we take the base currency and the quote currency. So these are the open trades. So I've got New Zealand Swiss short position, AUD Swiss long, and you can see the other 2 here as well. So the way this works is if we take our base currency and quote currency, so if we are shorting New Zealand Swiss, that puts a negative score on New Zealand and a positive score on Swiss, because we are selling the New Zealand and buying the Swiss. And then we aggregate this information into a very simple table like this. And this shows us what exposure to what currency we have. So if our score, you can see it's here, it's 2 on the Australian dollar. So that means I don't want to take any more long positions on the Australian dollar. If I took a short position, the score would then lower down to 1, and that would balance out the exposure. And this is how I do it. I mean, I don't know if you guys are bothered about this or if you guys do this, but it's a nice way to just manage positions and make sure that you're not in a position where you're overexposed either way on a currency. Careful, the cult of ICT will be after you. I'm not throwing shade to anyone, Ian. People can make money in lots of different ways in these markets. And small time frames are used. Don't get me wrong. They use a lot of high time frame algorithms and trading bots and things. But they're not manually sat there looking for these types of things. How do we get that report? Abdul, which report? Do you mean the technical analysis report, or do you mean this exposure thing? This exposure is very, very simple to make. There's no formulas or anything. There's just a format here to make sure the colors change with the numbers. But I made this in 5 minutes in Excel. You can do the same in Google Sheets, which is free. Sammy, we can check gold for sure. How are you guys doing? Have you all had a good week? You guys made some money, made some profits, stuck to your plans? It's always the important thing. So, let me take a look. Short term, I would quite like to take a short position on gold, and this is purely technical. And it's the same thing for euro dollar. So I'm just looking for this. You can see that actually my indicator has just sent a short signal here. RSI is overbought. 200 moving average is here. Pivot point, we opened below. So technically this looks fine. So if we can get a nice hourly close here, bearish hourly close, I'll take a short position. However, long term, if we're looking on sort of the 4 hour and daily, more than happy to go in long. Well, actually, sorry, I'm not more than happy, although longs make the most sense to me. I'm not looking to take a trade here, purely because this range is disgusting. You know, there's nothing here that I would want to trade. So it's more a case of I am bullish on gold. I'm just not looking to make money on that bullish move unless we get a sort of breakout of this resistance and we can continue higher. But the problem is here, if we do end up continuing higher, we will be at all-time highs, and we'll be creating a new all-time high with each bullish tick. So I'm not really a fan of that. So I would need to be in very, very small position. So maybe 0.5 to 0.025 risk, no take profit, and just trail stop losses up, and sort of squeeze price in a sense. However, yeah, overall, other than the short-term short that I'm looking at here, I'm not too bothered about taking a position. USD CHF. Abdul, reports aren't publicly available. We get them because we applied for them. We have, you know, I've got a trader that works for me that is certified. He's got licensing. I also have another trader that's in university that's got connections and things. We send them in the Elite Traders Discord every day, but unfortunately, you can't just get them. Sorry, yeah, USD CHF. So, I'll actually not taking a look at this. Let me get rid of all that. Let's see what's going on here. So quite a nice level here, actually. 200 moving average. Let's see if the fib comes in here. It does. We're kind of at this 50% level here. I quite like this, actually. So we'll take a look at the EDGEFINDER. And we can see if there's anything to support this idea. So what was this? Dollar Swiss. So if we are long dollar, yeah, ideally don't want to be selling the dollar. However, let's take a look at the Swiss. Yeah. So COT is basically reversed this position. So they are long dollar, short Swiss. And if we were going into this, we'd be short dollar, long Swiss. So we'd be on the opposite side. So although technically this is really, really nice, I really like this, just because we're going against the narrative, I guess. It's not really something I'm going to pay too much attention to. Platinum, yeah, we can take a look at platinum. I actually don't trade platinum. I'm not even sure what the ticker is for it, actually. We'll do, oh, it's XPT, that's it. XPT USD. Pepstone, there we go. Looks interesting, to be fair. We've got nice support here, previous resistance. So this could be viewed as sort of the break and retest of this level. However, that's not clear enough for me to take that. I like a clean break and retest where it's a very obvious push up, retest, and continuation, whereas this one is not really showing that. We do have the moving average cross coming in that could be a quite nice bullish sign. So overall, technically, it looks nice to the upside, but it's not something I would take. However, I wouldn't be, you know, if someone showed me that they went long here, I would understand why. But yeah, for me, not the best. Dollar yen. So I've been saying this before. Sorry, I've said this before and I'll say it again. Dollar yen is not something I will touch with a stick because it's so high up. So if we look on the the weekly charts, so that I don't want to be buying or selling right now, because I mean, look at it. Who would want to sell into this? And to be honest, who would want to buy into this? If you look at this, you'd be buying at an extremely high price. And not just that, there's the risk of intervention. And I keep saying this, and I don't want to sound like a broken record, but the problem is we just don't have any warning. There is no sign that an intervention will come. There are small things that you can look at. I did time one of the interventions a couple of weeks ago. It was a bank holiday. Institutional cop money was sort of flowing out of the dollar yen. So there was some signs, but again, that was a gamble. That wasn't, I don't want to sit here and say I can time interventions, because I definitely can't, and no one can. Gold, gold's bullish long term. What RSI you set? RSI settings. So I use 4 RSIs. So on the hourly time frames, I use the 50 and 200. So you can see here, seconds, minutes, and hours, I use 50 and 200. And then on the daily, weekly, and monthly, I use a 21 and an 8. USD CAD. Yeah, we can take a look at USD CAD. I should be looking at this one. In fact, I just covered USD CAD. Sorry, I had a bit of a slow brain there. Feel free to rewind it. I've already covered USD CAD. So what we can do is take a look here. Australian yen is really nice. I would love to get into here, but again, the same problem arises as intervention. We could get completely liquidated at any time, really, depending on your stop positioning. But even that depends on how much they put in. They've got the MOF have an enormous amount of money to put into interventions if they want to. So what I would like to see is a very nice pullback to somewhere here would make sense to me. So we'd come back to this level of support. Price would come and meet this 200 moving average. Then we could get long and continue this ride up. That's a rough idea. And that if that presented itself, I would take it. But yeah, it's still the same problem as dollar yen. It's not, I'm not going to sit here and watch this market for an entry. It's more if I'm browsing through, I see the entry here, I'll take it at low risk and take a little gamble. Oh, sorry, the RSI. Yes, RSI is length of 6, MA length of 1, standard deviation is 2, and these are the colors. I've got an upper band of 80, lower band of 20. So let's take a look. So the dollar against the Norwegian NOK or krona is something I've been, again, talking about for a while. I really, really like this to downside, especially as the Fed starts to cut rates, or when or if they cut rates. We can't tell the future. But yeah, if they do start cutting rates, which is expected sort of towards the end of the year, in sort of September, November time, this could be a really, really nice play into 2025. So I'd be looking to hold this to sort of Q2, so second quarter of 2025. And the reason is because the NOK is very undervalued. I keep seeing it pop up, especially in the bank reports, that the NOK should be coming down. Should be gaining some value into 2025. And against the dollar, as we do get rate cuts, it makes sense to start looking to short this. So technically, we've got a really nice trend line here. We saw upwards trend get broken and then start getting used as, well, still an upward trend, but you can see sort of reversed itself here, which is quite nice. So I'm looking just for this trend line to break, come up for this retest, and I would enter into something along these lines. The target's huge, so I'm not sure about that target, to be honest. So maybe just something a bit smaller along these lines. So because this is on the weekly chart, we need to sit through this for a long time. So I would probably use 3 to 4% risk on something like this. I use variable risk, so I increase the risk when I expect a longer wait time for the trade. So that way, a 1 to 2 is worth it, because I'm not going to sit for 3 or 4 months for a 2.5% gain when I could do that on the hourly chart in a day theoretically. Abdul, US inflation, it depends what your point of reference is, what your benchmark is. The US inflation is currently 3.3%. So again, whether it's good or bad or high or low, it depends what you're trying to base that against. I'm looking short GBP AUD, GBP, then same as EUR AUD, EUR NZD. My issue is the euro is just refusing to weaken. Well, the problem is with the euro, we've already seen a lot of weakness. So I think when we look at Euro New Zealand, because I was looking at this as well, and I kind of am still, but not too interested anymore. We've already seen a lot of weakness with the euro. So it's now a case of, is this weakness going to continue? It's not a case of, is it going to weaken, because it already has weakened. It's just, are we going to see the continuation? And I think we will. It's just, how long is this weakness going to last? Is it long enough for us to have a swing trade? Or is it more a case of we are in a short-term weakness and we can start seeing a reversal? Who knows? US 30, James. Of course, we could take a look at US 30. So similar situation as last time. I really, really wish actually I got in here. This would have been really nice. Touch off the 50% and this 200 moving average. It would have been pretty textbook. But the analysis here still stands. Price hasn't seen much of a reaction off this level. If we draw fib from low to high, because price has created a higher high, so I assume now we're in an uptrend, especially with the moving average cross. Looks nice to the upside. It's just there's technically no entry here for me. If we could potentially come back down to this 50% level, I'd be happy to take a trade back to these highs here. However, yeah, again, I'm not really looking at trades. It's more now a case of winding down for the month and starting to relax a little bit and close out of positions. Arton, no problem. So I'm just seeing if there's anything else here. Euro Swiss, again, I was looking at this one, but because we're not seeing the euro weakness continue as much as it was, we're having quite significant pullback, really. We've broken past the 50% pullback. We've broken past the 0.618 level. So now I'm looking for a potentially longer term type of play. And this again is accounting for if we can get the weakness that we need to go in for a longer term position on the euro. So it'd be something along these lines. Let me just see if this lines up with anything here. Not really. I feel like this is a bit of a forced level. There's not much here in my book. So yeah, I think I'd sit out of euro for now. I'm already in one euro position, but other than that, I'm not really looking to take much else, and that position's in drawdown as well. I think his prime to drop just need an interest rate statement trigger, like strong or not weak enough CPI. Yeah, so this is another thing. When you're looking for trades, you don't always need to do what I'm doing in this case, where it's like trying to time these pullbacks and getting at 50% levels, because you can use economic news as a catalyst. So, for example, when we had cooling US numbers, when we had I don't know, for example, a weaker CPI or whatever it may be, that could be the catalyst to get in, because obviously if we're seeing cooling numbers and we see continued weaker numbers come out, then we're going to see bearish moves. So we can use that as our sort of leverage into the markets. However, for things like that, it varies from market to market, of course. I'm not saying that's a rule for everything. Australia, New Zealand actually is one I've been looking at. I really like this one. However, it's just waiting for this pullback. So again, we've got quite a strong Australian dollar. I think the strength will continue for now, at least, until something changes. But yeah, the hawkish RBA really helped out the Australian dollar, which is nice. So I'm looking for this final stretch here to this pullback. You can see we've got quite a nice level of previous resistance. So this would work really well with the classic break retest. That would align with the 50% level as well, and potentially even with the 200. So yeah, looks really, really good in my opinion. But yeah, it's just a case of when we get that entry. Actually, I'm just going to set an alert here. There we go. GBP AUD was one I've been talking about taking for a long time. I've missed 2 entries on here. Oh no, sorry, I missed 1 entry on here, which was this pullback here. I was so focused on this entry, I had tunnel vision. I didn't notice this level here that price clearly reacted from. And this was, I'm now looking in hindsight, it's like if I wasn't so focused on this 50% pullback, I could have potentially caught this move here and made some money. But this is the problem. I mean, it didn't line up with the fib, and the fib is quite a nice part of my strategy. So it was, if I did enter, I would have been sort of playing it a little bit loosely, which I don't really like to do. So it's one of those things. It's so focused on following rules, I missed something that was quite good. But there you go. GP CAD, we could take a look at pound CAD. I've got an alert set here, so I must have seen something that I've gotten rid of. I'm not sure what. Oh, it may have been the fib here. Yeah, okay. So fib low to high, moving average cross here into downwards trend. So actually looks quite good for a short. Price is coming back up now. Now, if you guys don't really watch my content or you don't interact with me too much, you won't know, but I am a perma bear on the pound. And you guys might have heard of someone called Gary Stevens. He was a city trader that now has a YouTube channel. And his specialty was, or is, inequality analysis. So it's essentially looking at how is the population doing? You know, are people happy? Are people surviving? Do people earn enough to have an okay life? And although the numbers necessarily don't reflect that people are in a bad spot, people are in a really bad spot. The average person in the UK is really struggling. So the point is that a lot of these analysts that look at numbers all day is all they're doing. These are potentially multi-millionaire analysts that work for large firms. They only see the numbers. Their friends are rich. They are surrounded in rich environments. Whereas retail traders or traders that are more cautious about the lower class or the average person are in that environment. They can see how the economy is doing firsthand, and they can even feel the effects of sort of the cost of living, the energy crisis, all those things. So regardless of what the numbers say, I am a very, very bearish person on the dollar on the pound. And that may change with the election. So if Labour is voted in, they want to fix Brexit trade deals, and you know there's potential that things could start easing up on the sort of average person. However, I think we're going to head into a very, very bad spot economically if things don't change. But yeah, if you guys want like a full in-depth thing on that, go and watch a guy on YouTube called Gary Stevens. He words it very, very well. What's happened for gold? News is coming. Is news coming? Let me see. Let me see what's coming out. Oh, we've got 15 minutes, and it's not really relevant data, to be honest. Month on month home sales. Yeah, not overly important for me, to be honest, but we can definitely have a look for you guys. Oh, actually, this, if you guys were here maybe 15 minutes ago, you'll know I was looking for this gold short. So maybe this will come in play, and you can, I'll execute with this. I'll execute this with you guys potentially. We've got 15 minutes, and then yeah, we've got news as well. So maybe not. We'll see. We'll see how the news comes out. Let's just see. Yeah, there's not much here, to be honest. If you guys are watching, you'll know I'm stuck in this meme coin at the moment. We've got the US debates. I think it's today, actually. Trump versus Biden. So I bought a meme coin. You can see these dollar signs where I bought in. So I'm in quite a significant loss, actually. I think I've lost about 90% of the money I invested. So yeah, just watching to see if I can get out of that at some point. USD CAD. We've covered USD CAD, but I'll pull it up here so you can see the general idea. Just waiting for pullback to the support. Dollar is weakening, so this could potentially give us an entry into USD CAD here. So just a very, very bog standard textbook support buy. But you can see this support, it's very, very strong. It looks quite nice. It was resistance throughout here, broke out, and now it's just testing as a very typical support. So nothing complex or mind-blowing there. So yeah, feel free to ask questions, guys, if there's anything specific you want me to look at. If not, I can keep rambling. I've got no problem just talking and talking. We can have a look at EDGEFINDER together. So there's nothing here actually that's very interesting. We don't have any very bullish or bearish assets. It's just bearish and light bullish. I'd say the most interesting things are New Zealand Swiss and Euro Swiss. Actually, I took New Zealand Swiss on stream last week, I think it was, with TraderNix community. So this was the position I entered with, on this stream. So I am very sorry for anyone who took this with me, because it's been one of the most painful trades I've had this year so far. It's just in and out of drawdown. So you can see here, it's, we've been in profit, 6 times, been in drawdown for the majority of this trade. However, saying that, I'm still happy to hold. The 200 is still above price, so we're technically still in a downtrend. We're still respecting this fib level, still respecting this level of resistance, and the EDGEFINDER data is still bearish. So it's fine, it's just painful. It's one of those trades that just won't end. New Zealand dollar. I wouldn't mind this to the downside, I think. So the hourly is bearish. You can see we've got 200 above the 50. So that's a downtrend according to the moving averages. We've now seen a breakout of this support. So that's nicely in our favor. So we could see something potentially like this. We've got the moving averages are still bullish, but they look as though they're about to cross. So that's a potential sign. This is still quite premature. So I wouldn't be taking this today, I don't think. And then we've got a potential target here. Something like this. So that would be, yeah, this would be my game plan for this. But again, we need to go and see. Let's find it. Here we go. So we can have a look at the data for it and see if it backs it up at all. So it is bearish, -6. Hot data's flat, seasonality, trend reading. Retail's long. So actually it's not bad. would consider taking this, but again, I'm not really too bothered about trading for the rest of the week, or even for the rest of the month. But yeah, it looks okay. Done gold and silver. Yes, we've done gold. I can do silver in a moment. I can't tell you what fundamentals are behind platinum. I don't want to give you anything that may be false information because it's not something I trade. I don't pay attention to platinum at all. Oh, here's another interesting thing. I was talking to one of my friends that works in London, and they have a general rule. Now, this isn't specific. This isn't something that is, like a company rule or like a global rule for all institutions, but it's something that is done in some places. So if you read any sort of bank reports or research into financial markets, a lot of the time you'll see that the articles on the currency are written by someone from that country. So for example, the pound might be written from someone from the UK. The yen will be written by someone from Japan. And the reason is because of something similar to what I was just saying about the people being hands-on with the economy. So for example, if I was working for JP Morgan, I would understand the small effects and how the smaller influences can affect the currency more than someone from, for example, Japan or America. And obviously, I'm not saying that I actually do. It's just an example. So yeah, sometimes, if you collect data on your trades, take a look at the currency that you're from. So for example, if you're from America, take a look at your USD trades. And it wouldn't surprise me if you outperform the USD trades compared to all the other assets, because you have hands-on feel for the currency. You can get a grasp of how things work there compared to, for example, Europe or the UK. No, again, that's general rule. Don't take that word for word. It's just something interesting. So let's get back to the charts. If you're pound bearish, are you already positioned to long the FTSE? No, I'm not. I'm not in any positions on the pound or related to the pound or the UK at the moment. I'm in a long position on Jet 2, actually. You can see here in drawdown, but this is a position trade, so you guys, happy to sit through that one for a while. While inflation is high, we buy commodities and stocks. I was asking, what do you think Fed will cut with high inflation? What inflation is high? I'm sorry, Abdul. I think I'm getting a bit confused on what you're saying. Yeah, UK 100 is a major part. So for anyone that doesn't know, the FTSE 100 is essentially the S&P, but for the UK, it's the top 100 countries. Top 100 companies. But I don't like the FTSE. So my general rule is I only buy indices. But if we look at this, and this is the hourly chart, it's so ugly. This isn't something I want to be involved with. I don't want to have to sit through this. The daily is also very ugly. So if we compare this, actually, let's do it. Let's compare this to the S&P. Let me just hide the EMAs. So this is the FTSE on a line chart. Now let's compare the S&P. Look at the difference between these two. Why would I trade the FTSE? Why would I try and even be involved in this when I could just be buying the S&P? And yeah, sure, of course you could make money in the short term trading both. I completely understand that. But why, trying to gauge the FTSE and trying to get into this is just a lot more work. And trading is a lot of work as it is. You've got a lot of reading, a lot of sitting down, a lot of staring at charts. The last thing I want to do is add on more work to that, trying to force my way into the FTSE when the S&P is just so much easier. What account size are you currently trading, and what account size did you start with, James? So that's an interesting question. I've never been asked that before, actually. So I have two trading accounts. I have a public account, which I've shown once on this stream. which is it's got roughly £30,000 capital. So it's the one I use for public. I share it around with people because I don't mind. And I've got a private account where I hold some definitely not investor money in there and trade specific things. Can't get into too much details, but it's a larger account in low to medium six figures. And then I'm working on a prop account as well, which is 100K. So that should be added to my arsenal pretty soon. So let me add this back to how it was. There we go. So yeah, point is, FTSE is a no-go for me. It's just too much effort for no reason. I keep an eye on it, don't get me wrong. I do watch it, but absolutely not something I would look to trade actively. Yeah, SPX is better. Yeah. US indices by New York Stock Exchange. Exactly. The pound regained some lost strength in the last 12 hours. Yeah, the pound can gain as much strength as it wants. I'll still be bearish. And I think it's because it's like the great financial crash, the GFC in 2008. There's a lot of things there that were unnoticed until the very last moment. I could see that being a similar case now with the pound. There's a lot. I'm not going to go into it here. I may prepare some stuff and get some real data for you guys for the next stream that I'm on if you are interested. But I think there's a lot of problems here, not just with cost of living and energy crisis and things. I think there's some deeper problems that just aren't being factored in and people aren't really paying attention to yet. And don't get me wrong. I'm not trying to be the next big short guy or anything. I'm just not happy with the pound at the moment. So how did you get all that funds? Could you share? Yeah, so trading's not that hard, to be honest. I think to get capital, you need to work. There's no way around it. There's not some secret trick. Essentially, I had a okay job. I used to be a graphic designer, a motion designer in London for a large British-based television company. So I worked for them. I did a lot of, when I say a lot of overtime, I did to the point where they wouldn't let me do more overtime because it would have been illegal. So I got paid double time for my overtime. I did some side hustles. I did everything I could to get money, and I was still trading it. So essentially, I just worked as hard as I could, as much as I could, everywhere I could. All that money went straight into trading. Once I had, I think it was around 15,000. I then started doing some seed capital raising. So I was, now bearing in mind, it's completely illegal. I cannot go to, for example, anyone in this chat and say, look, I can trade your money. I'm not allowed to do that legally. But what I can do is trade on the behalf of friends and family. So I can basically just talk to them. And I said, look, this is been my performance for the past year, started with X, and now I'm at Y. If you want to give me $100 or $500, $1,000, small amount, monitor how it goes for 6 months, and then you feel free to add more in. And it essentially snowballs like that. If you're profitable, money will not be an issue. As long as you manage business, if you can trade and run a business at the same time, you'll be set. Because trading isn't just sat at the charts. If you're looking to make a career, you need to know your books, your accounting, networking, all sorts of other stuff. So yeah. Guys, any last questions? Because there's nothing else really for me to discuss with you, to be honest. Oil, let's take a quick look at crude oil. Ranging at the moment, not much here. Who's your mentor? I didn't have a mentor. I've got a mentor right now, actually. I'm a great believer in always trying to learn. So for example, I would never change my technical strategy. I would never think of going for a technical mentor. I do have an macroeconomic and geopolitical mentor at the moment. But yeah, if you guys want to know more about that, let me know. I can pass you on to him. He's very, very good. But yeah, I don't want to start advertising other people on Nick's channel. So yeah, never had a mentor when I started. It was a lot of trial and error. I lost a lot of money starting out, and things started to click. You know, it went through that phase of trying everything, nothing working, and focusing on one or two very small things, and it evolves and adapts as you journal and optimize. Trading psychological issues. Yeah, I don't want to sit here and act like a some little victim, but I'm quite an anxious person. No, I'm not saying I have anxiety. I'm not saying that whatsoever. I've not been diagnosed. I don't want that label. But generally, I worry quite a lot, and that affected me holding trades. So it would be a case of I would enter a trade and I would sit through all of the drawdown and I would lose 1%. And then as soon as I was in profit, I'd be worrying about giving that money back. I think that's the same with a lot of people. So actually trading helped a lot with psychology because I had no choice. I wouldn't have been able to become a trader unless I learned to deal with my issues. So I think if you're coming into trading with bad psychology, it's not necessarily a bad thing because it pulls out and it forces you to recognize the bad habits you have in day-to-day life. And you can either fix them or you can walk away from the charts and try something else. New Zealand dollar. Right. Okay. Okay, guys, I'm going to quickly cover New Zealand dollar and then I'm going to get out of your hair. There is another guest on the way, so I don't want to take up their time as well. Let me switch this chart over. Oh, actually, I've got New Zealand dollar lined up already here. Feel free to rewind through my rambling and you'll hear me talk about New Zealand dollar. But yeah, guys, thank you very much for having me. That's it for now. I will be back at some point, hopefully next week if the A1 guys don't banish me from the show. But yeah, you guys have been great as always. Thank you very much. And I will see you later.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hey everybody, how we doing? Happy Thursday. Nice to be with everybody today. Let me go ahead and show my screen. And if you're looking at me like, that guy doesn't look like Nick, you're right. It's not. My name is Chris Pulver. Nice to be on the show with you. And let's kick things off with a little bit of top down. I was just doing some back testing. I'll share that in just a moment. I went into a bit of a deep dive yesterday with some option strategies, my core strategies. And so today I'm long the SPY up to 548. I've got a 64-cent debit on a call spread, or just a call. Actually, it's a long call for a 1 DTE. I'm out to Friday. Tomorrow is the end of the month. Tomorrow is also the end of the quarter. We had some light earnings coming in. I saw Walgreens was down. I do own some shares in that. I'm a little disappointed that they're down $3 on a $15 stock that's now down to $12. So I'm looking at probably an easy way to repair it, but not wanting to just dump capital at kind of a silly stock and try to. Well, either way, I'll do the math to see if I need to double down on it, but I'm probably not going to. I just have a collar trade, which means I have a covered call and I have a long put, so I'm essentially protected to the downside, but I'm still annoyed seeing the stock go lower. Let me see this. Okay. Comments wise, all good. Good morning, everybody. And let's have a look at everything. So I'm willing to take a lot of requests on charts and technicals. Frank wants to jump in here with me. Great. He and I can nerd out about some stuff. And anyway, we're looking at the SPY at 546. Things are fairly quiet. The week thus far, not much going on. The week has edged out a slight green candle. That's my shaded green in the background. We had an immediate pop to the upside to retest the high from Monday around 546, almost 547. Why am I long to 548? Here is some software that I have through dynamic trends and through one of my trading rooms. One of my courses is called Delta Trader. 548 is this big fat level right there. You can see that there's really nothing else on the chart. So 548 is also a huge open interest size. And so between 548 and 550, I'm looking to see if the SPY can get there by tomorrow. If it gets there today, great. I'll still have some more time left in the trade. Gets there tomorrow, and then my at the money will be trading for hopefully like $1.50 to $2. So I'm in this for a 64-cent debit. It was just a long call. So let me type this out here. So I did a 628 expiration. This is on the SPY. And it was a 548 long call for 64 cents debit. So that is the trade that I'm in. If we get to a, let's say 45 or 50 delta, that is $1, we'll say $1.85 away. The delta is probably like a 30 or so, something right now, as I was calculating that earlier. So if we're sitting on a 30 delta and we move $1.80, actually in this case $1.90, that's another 57 cents added on top of my trade. That's just like conservative calculation plus the 64 cents. You know, if I close this out by later today at $1.21 credit, that's fine. I'd obviously like to see it, you know, not just get to 548, but maybe a little bit higher. If I can get $1.50, $1.60, that'd be pretty good overall. But I'll be watching, see if the market's interested in finding a level today. And here we're, like I said, just squeezing out a little bit of a gain on the week. Okay, US 30. Here we go. Yeah, let's talk about it. US 30. We're talking about, you know, a little bit of divergence between these indexes. So if you're looking at US 30, closest resemblance to that is the Dow, right? You're looking at the S&P 500. We've had some all-time highs notched in the S&P, all-time highs notched in the NASDAQ, the Dow. When we had this kind of double top here, actually, I take that back. It's not really a double top. And I don't know if I had mentioned this in the A1 trading session, but to me, this looks like a pretty classic ascending, ascending wedge, something like that. So if we have a low to high swing from this October low of last year, if this Dow continues to test resistance, some of you might look at this and say, well, that's the top. Not necessarily. If it's an ascending wedge, usually that is a bullish sign that we have the ability to break and go higher. Okay. So if we're going to see higher highs by the end of the year, this is pretty good structure on the Dow. All right. So the US 30 to me, I mean, again, I'm not talking about today. I'm talking about over the next maybe 3 to 6 months. If we kind of stay in this structure, we go sideways for a little bit. Markets are looking for a new catalyst to kind of lift it up higher. That would be the direction I'm looking to trade. Okay. Now, if we were going to go lower, then we'd have to break that structure there, which has not happened. So I've looked at this on all the indexes. It is hard to justify. I know it's easy to talk about a bear case. I know it seems like, you know, all these things are wrong and all these things are questionable and uncertain. But if there's no confirmation to be a bear, you're just calling the top. And you know how long that can take. You know, I mean, I'm talking about being wrong about 30 days, and that's exhausting, let alone if I was long and positioning a fund to be short, like literally just having a bear fund and all my bias was pointed bearish. That would be exhausting and wrong and costly. So I'm just not looking to be short right now. Doesn't mean that I'm crazy bullish. I'm really just trying to collect some income. That's why I did a bunch of testing yesterday. Let me see if I can show you. I mean, I did a bunch of strategies yesterday. So just for fun, I ran all these tests yesterday. So if I show this here, strategy on the SPY, the Qs, the Apple's an underlined, Google underlined, Tesla underlined, SPX, NDX with spreads, the Dow and the IWM, NVIDIA, Microsoft, Netflix, Amazon, Facebook, before it turned to Meta, right? I did a bunch of those tests yesterday. So just one of my core strategies. And it's, I mean, to me, it's like, yeah, I will keep doing what I'm doing. There's a stop loss. There's no ownership. There's income. Average trade is 30 to 40 days. I mean, it's pretty nice. So anyway, that's what I see in the US 30. Okay, so I see a bit of an ascending wedge, which means we're peppering these highs at 40,000. If that keeps getting tested, we want to look for a break, right? And what I'm saying is, I'm wondering if the market is needing or getting another catalyst to break it higher. So if we take a look at the SPX, for example, okay, SPX, one thing that concerns me on the technicals is we are overbought. That's what this connected line is here. You know, we had this nice run, and just to show how long this can last, we were overbought, we were overbought, we were overbought, we were overbought with divergence, right? The entire way up from that big rip we had here in October all the way through March. This was just crazy overbought. And so because it kept stretching, I was starting to get bearish. As soon as we had this gap, I'm like, okay, we're going to come back and fill the gap. Nope. Okay, we're going to come back and fill the gap. Nope. So there was a period here that I was losing on the put side, but fortunately trading both directions. So I was long on the call side, and it made me money. I could have made more money if I just stayed long, but sometimes you never know. You're just going to get some volatility, right? So anyway, I would like to see a bit of a pullback, okay? And by pullback, I mean something here. We test this level, okay? We maybe poke up a little bit to 550 or so, or 5,500 again and stall. But I would just like to see this. I mean, we had an April correction. June, July historically are bullish. By the way, the next 2 weeks in trading, the next 2 weeks historically in the markets are the most bullish. I don't know why. Maybe it's because it's summer trading. Maybe it's because it's low volume. We are ending the quarter. We are kicking off Q1. We have a holiday next week on Thursday. The market's still open through Friday. Friday we have non-farm payroll. You know, and I said this week. Non-farm payroll is either going to be a move like nobody's watching because it's a summer holiday, or it's going to be a dud because nobody's trading. And right now, all the short interest is kind of evaporated. Everyone's just kind of accepted that the market's in a drift. One thing, I listened to this content yesterday from Tasty Trade. One of their analysts made a pretty good point. I mean, if you are a passive investor, we talk about markets every single day. So I mean, we're in the trenches, and we're always looking for, like, this could happen, this could happen. What are we going to do? The reality is, if people out there are passive investors, okay, people out there that are passive investors haven't seen new highs in their accounts since January of 2022. And so just recently, literally this year, this was the last time they had an all-time high in their account, right? If you're a passive investor, so think about, all the 401ks and all the, financial advisors that have just been like, oh, the market's back in a bull market. Oh my gosh, it's so awesome. Okay, they look like geniuses. They're not. They're just letting the market do its thing. But this was the previous all-time high. Traders, investors, passive investors were sitting through a drawdown for 2 years in order for us to finally eclipse those highs. Now, it's nice to see that we are sitting at all-time highs, but like I said, just a little bit of caution. We're sitting here at all-time highs with some overstressed conditions. If we have a pullback, great. Maybe it offers up a dip. If we're still continuing to kind of blow this top off and we stretch higher, technically there's room for this thing to get up to 6,000. I've mentioned that. I don't think it's that far-fetched. And truthfully, I think the market is more of a destination right now than it is intraday. So I'm way more interested in the next 3 to 6 months, are we higher or lower, and position for that, as opposed to what are we doing today. Just my thoughts. I think it's way easier to look out farther than it is to be trading, today. If I were to trade today, then I would be solely focused on 0DTE, and I'd be solely focused on futures trading. I'd be solely focused on inverse ETFs and all this other stuff that's, hedging it. I mean, I do that. I have a lot of collar positions on my own stocks. If I want to take a bearish trade, I can, but I like to do a lot of kind of omnidirectional trades. I like to do a lot of hedge strategies where as long as I eke out profits, I make money. So doesn't have to be challenging. But if you look out farther, I guess you need to ask your question now until the end of the year. Are the U.S. markets going to be higher or lower? We have a lot of stuff pointed towards they like to go higher. Historically speaking, there's a 54% bullish bias baked into these markets. you're talking about right now, this entire market has been led by very few stocks, and it's still pushing all-time highs. So the one big catalyst that's under the surface is if we start to see a broader market movement, that's a good thing for everything, right? NVIDIA can take a back seat, right? Apple can slow down. Microsoft can slow down. Maybe there's other sectors that will pick up the slack. What those sectors are, I don't know. Are they going to be, consumer retail? Are they going to be other communication services? Are they going to be something that's more defensive, like consumer staples or energy or utilities? I don't know. But if the broader market picks things up, then that can help, support the top 3 stocks that have been carrying us for the last couple of months on the SPY, on the Qs, on the S&P, on the NASDAQ, right? That market cap weight, because it's heavy concentrated, and, it's concerning, but you have to give the broader market a chance to catch up. And if it does catch up, great. We're going to all-time highs again. And that's not just the US 30. That's not just the Dow. That's not just the SPY. The one trade that I keep looking at that I'm really curious on is the Russell. Okay. The Russell, if you go IWX, this is going to be a Russell 200, which we're sitting here at all-time highs. If you go to the Russell 2000, we're sitting here in this indecisive zone that still hasn't really turned bearish, right? But if we stay here, same type of pattern as the US 30. If we test the high, test the high, test the high, we're making higher lows. If we breach this level, this is probably one of my favorite index trades for the rest of the year. If we see a nice clean break on the Russell above 210, this is IWM, I think this run to 240, 250 could be pretty exciting. That would maybe be one of the bigger index moves that we could trade. And obviously we could see the SPY and the Qs blow off tops again, but you're talking about maybe a 15% move in an index. That's pretty exciting, right? When we had a broad market rally from October to March, the Russell actually outperformed its counterparts, but it is small cap. All you're really looking to do here is maybe close the gap between large cap outperforming small cap. If you've seen that chart, we're at one of the highest, inequalities or disparities between large cap and small cap since like 1999. So it's a big deal. Doesn't mean it always has to historically close it, but there's room to catch up is my point. Okay. Game City says, can you guide me where to start learning option trading? I'm trading options. Sure. I mean, I hopefully I can guide you a little bit. If you come to my YouTube channel, youtube.com/Chris Pulver, I do have some good starter videos. So if you look in my video section here, you can search for options 101. There you go. So long call options, long put options, credit spreads, covered calls, turn winners into losers, own stocks for free, strangles and straddles. That's a good way to get started in options trading. Obviously, when I'm in this session with A1, and if Frank joins me, or I'm talking options quite a bit. Why? Because it's an easier. To me, options is a fair asset for anybody to learn how to trade. It allows you to trade leverage in an equities market. If you have a margin account, you're getting 2-to-1. If you have a cash account, you're getting 1-to-1. But you can utilize leverage, put up way less cash, and be trading both sides of everything. Carve out profits with strategies that are, single direction, both directions. Just trade what the market does over and over again, and everything becomes very mechanical. I love options for that. If I can carve out a strategy that is a 55, 60% winner, I make bigger winners than I lose. I make money. If I carve a strategy that's 80 to 85% winners, 90% winners, it builds a lot of confidence in what you do. It's a process, right? Control the risk, manage the profits, redeploy your capital. It's very mathematical, very probabilistic. So that's a good place to get started. Okay, this is my YouTube channel, youtube.com/Chris Pulver. And if you search my video list, which I have, 500 videos, almost 497 videos. So there's a few in there that'll help. But if you want to go specifically at options, check out those options 101s. And give me some feedback on the videos. Let me know. If you want some more information, just shoot me a message. Okay. US 30, run through it again. I feel like Vince Vaughn in Wedding Crashers. Okay. All right. I'll make you a balloon. All right. All I was saying on the US 30 is, to me, this looks like an ascending wedge, which is this. The bulls have topped out here around 40,000 on the Dow, okay, the US 30. We're making higher lows. I could see this market still testing. Now, all this means for me in this summer drift is, could this go both directions? Sure, it could go either way. But based on the structure of this bull charge leading the way and this momentum from low to high, usually an ascending wedge is what got us there is going to have the momentum going forward. So this to me would be what I'm thinking happens next. We find a way to justify going higher. And to me, this is broader market. This would be, non-farm payroll. And again, I think the U.S. is in a bit of a delicate situation with some of the job numbers. Is yes, we've seen unemployment rise. We've seen non-farm numbers come in steady, but not gangbusters. And you have to wonder, if unemployment continues to trickle higher, there's a pretty staggering stat. Like if you've seen a 1% move from unemployment in a 12-month rolling period, that's usually a pretty good sign of a recession. So could we have a odd soft recession? Maybe. Some people have sworn they've been in recession since 2022. But anyway, what I see on the chart here is we're making higher lows. We have equal highs here at 40K. That's where I'm looking to see if the top can get blown off a little bit and this can stretch higher. If that's a broad market move, then we're looking for everything else to go as well. So the one thing we keep seeing here, I can see a pullback happening on the SPX, and maybe not. I mean, honestly, look, it's friggin' June, July. Maybe the best we get is the market just does this. Maybe just goes sideways. Maybe for once in 4 years, the market wants to stall and go sideways. We have had nothing but trends up or down since 2020. Actually, go back further. I mean, we've been in trends since friggin' 2017. We have not seen a period of sideways movement or consolidation since 2017. Okay, this was 2017 ripping higher. Okay, 2018 was a correction. That was a Fed put. 2018 to 2019, Fed put. 2020 COVID crash, global economic crazy stimulus, debt fueled rally. 22 correction of deleveraging. 2023, Mag 7 led the way. AI started to be hype in the trigger words. And now 2024, it's all AI and it's all tech for right now. But we're going to see if the broad market can catch up like it did in 2023. We had 2 broad market rallies in 2023. It was in May and it was in November. And here we are now. It's just the best of the best, the creme de la creme, the cream of the crop, the top 3. And you wonder, is the broad market going to step up and pick up the slack? Okay. All right. Let's talk some other instruments. So, like I said, index-wise, US 30, I'm looking for that ascending wedge. SPX, NDX, SPY or Qs, I'm looking for a bit of a pullback just because we're overextended on the daily charts and weekly charts. I would like to see it pull back, fill maybe the CPI gap from a couple weeks ago, but we have not had a 2% pullback on the SPY in over 300 trading days. A 2% pullback in a day, right? We've had pullbacks. We had a 6, 7, 8% correction in April. So don't get it twisted, right? We've had corrections. April is a correction, but in a single day, we haven't had a 2+% dip in a single day in over 300 trading days. So this market is heavily tilted bullish. Okay. Game City says, which broker can I use for options trading? Trading outside the US? That is a good question. Look, I know a lot of major US brokers they do allow US or non-US traders. I would point you in the direction of, I work very closely with Tasty Trade. I love them as a broker. They've been great to me. I would try to start with them. If they can, I can do things with a Tasty Trade account with IRAs that I can't do anywhere else. I can trade futures. I can trade crypto. I can trade, obviously equities and options. I can do all sorts of strategies with them that you can't do anywhere else. So the permissions I get from Tasty are great. I would like to say start with them. If they can't service you as a non-US trader, then you can look specifically at what brokers are in your country that allow you to trade US equities. The difference would be is maybe you have leverage, maybe you don't. Maybe you have restrictions. I'm not sure, but I would say start with Tasty Trade if possible. Micron slumped. Did we have Micron miss earnings today? That's in the semiconductor space. How bad was it? Not bad. Not bad. We did a hypothetical on this one. I didn't take any earnings trades this week. I just didn't want to toss any money at it. The one that would have worked out really nicely was FedEx. We have Nike coming out after market today with earnings. Micron is from 142 to 135. If I was doing an in the money bear call spread, that was going to be my hypothetical trade, collecting a lot of credit up front, risking very little on the trade. It didn't move enough to have this trade be profitable. I mean, you're still risking a little bit on the trade, but not much. Anyway, all right, let's talk gold and silver. Contact you. Let me do this. So if anybody wants to get in touch with me, I am here every single day in my Discord channel. That's probably the best place to find me. Let me send you a link to that. So I'll send this for everybody. If you want to join my Discord, all are welcome. It's a free group chat. I'm here every single day posting. Okay. So now, again, quick disclaimer. If you join my Discord, it's not me sending private messages. That is the one thing that I will say I absolutely hate about Telegram and Discord and this service and this service. If you join my channel and you get a private message, it's not for me. And I cleanse my channel all the time from imposters. There's people that try to mimic my name and copy my name, and they get it like one letter off. Just come to the free group chat. That's the best place to find me. The free group chat. Okay, that's where I'm at. I don't want to send any private messages. If you want to message me, that's fine. But I'm not going to reach out to you personally. All right. I just keep it in the free group chat, keep it public, keep it transparent, as it should be. So anyway, here's a link if you want to join. Let's go invite link. I'll make this so it doesn't expire. And there's the link. So here is my Discord channel. There you go. The one-on-one videos just come to my channel here. So if I share this, I don't know if maybe this search will work for you. It's just my options 101 in my video playlist. So let me see if this works. Options 101. There you go. Okay, so see if that link works for the YouTube channel. This should just take you right here to my playlist. And there's a ton of videos. I mean, I do a lot of live sessions, but I have like 60 or 70 videos on just, timeless education, you name it, I try to knock. So anyway, all that. And anyone recommend a futures options broker besides Tasty Trade? You don't like to trade futures? Tradeovate is another good futures broker. I have a couple of friends that are on Tradeovate. That is TRADEOVATE. But if you are a futures trader, Tasty's pretty good. I don't know what the beef is with them. I got nothing. I trade futures with Tasty. They've been great. My commissions are low. The platform is easy to use. Tradeovate's another one that's pretty popular. A couple of friends I have that run future services, they use Tradeovate. So they're out there. But as with all, make sure you're using a regulated broker. Okay, be careful with the prop stuff. Just throwing it out there. I hate hearing the bad stories of, I made some money in my prop firm and I didn't get paid, or the prop firm is only using a demo account, or I don't know. So just do your homework, do your research, and make sure that your capital is safe. So if you have a real account, absolutely work with regulated brokers. If you ask me what Forex broker to recommend, there's maybe 3 in the world that I recommend. I've been with OANDA for almost 10 years now. And I'd say OANDA for US. Tasty FX is now IGUS. So it used to be IGUS. Now it's Tasty FX. You can trade Forex and Tasty, but it's Tasty FX, which is great. I've been trading Forex since 2007. And Eightcap is, if you're non-US, Eightcap's my favorite broker. I was with Pepperstone for a while. Actually, some of the team at Eightcap formerly was with Pepperstone. So Eightcap's a great broker for non-US. You can also trade CFDs and other things. So OANDA is not trusted anymore. Okay. Well, I've had no problems with them. I've had disruptions with them, but I mean, they are super well regulated. So I don't know how you can say they're not trusted. IC market is so much better. I've never even heard of that. So anyway, do your homework. That's all I'm saying. I mean, I've had millions of dollars in OANDA It's been fine. The one thing that has been annoying has been my robot trading getting disrupted by server changes and kind of things that I can't control, and that is super annoying as a trader. All I want to do is trade. I just want to focus on the process. I don't want my server disrupted. I don't want crap changed on me, and I want leverages changed. So that I don't like surprises. I just want to focus on trading, which is already hard enough. There you go. So IC Market says, yeah, so they're the best, but they're not allowing US clients. Well, then I guess I'm out. All right, Frank, what's up, dude?
Hey, Chris, how's it going?
You want to talk some brokers? Seems to be the direction today.
No.
No, okay, that's fine.
Not really.
Yeah, I'm good. So, like I said, do your homework, regulated brokers. That's all that matters. And then focus on the process. Trading is trading. All right, dude. I'm sitting here watching the SPY, seeing if we get to 548 today. We're trading at 546.56. Big gamma level of 548. We almost got there this morning. We're at 547 and change. I've got a long SPY position. Frank, did you personally happen to nerd out at all with any of the look back software that I shared?
A little bit. I was testing.
Okay.
I was just testing naked calls for 1 day out.
Okay.
And then wrote it to expiration, and I think I just put a 50 delta because I'm thinking about just buying right on the money and seeing what it would do throughout the day. And it actually was a losing strategy. But I think there was one where it was a call spread, and they were, I think they were 5 points from the money. So there's 5 points in the money, and then you sell a call 5 points out of the money, and then did that for, I think I did 5 days, and I think that was a semi-winning strategy, but I don't know. I have to look at it again.
Gotcha. I'm going to play around with something right here. 15%. So maybe the quick profits, 30 days. 30 days. So I had a pretty interesting test right here. If you see my screen, this is basically, I call this it's kind of a split spread, which means if I went into every week with this trade, where all I'm doing is I'm buying a call at a 70 delta and I'm selling a call at a 30 delta, I'm going after a 15% take profit of what I paid for it. That did really well over the course of, I don't, let me check my spreadsheet here. I think the start date was not 2006. It might've been just slightly after that, but let me check this out. This is the 5-day, 10-day. So let me see when this first date started trading. So this started January 11, 2006. Okay. So this racked up about $32,000 in profit. Percentage wise, we had about a 77% win rate. Now, what's kind of nice about this is you go into 2006. Let's say you started trading there. You had a terrible market in 2007, late in the year, Q4. 2008 was abysmal, pretty much the entire year. 2009, we didn't bottom until September 2009, and then we've had a nice bull market. We've had some pullbacks, here and there. 2011 was a downgrade. 2014 was an oil crisis. 2015, 16 was sideways. 2017 breakout. 2018 pullback. 2019 rip up to all-time highs. COVID break in 2020. Deleveraging 2022. Point is, this is a single directional trade. If all I did was had a slight bullish tilt to my trades, carving out these little tiny profits and wins, you see there's a lot of trades. You're examining over 1,400 trades, and I mean, yeah, I get $30,000 over a 17, 18-year period. It's not that exciting, but it's a one directional trade. I had some pretty good strategies yesterday. I was running 95, 96% win rate, 99% win rate on some of the underlines. Didn't own a single stock, used stop losses, carved out some profits, and generated about a 7.5% return annualized. So anyway, I mean, I went deep on this yesterday, and that's pretty much all I did for several hours was run a bunch of tests to save me a ton of time. So I still have some more to test today.
Did you put in Google Sheets?
I built it. Yeah. So I save them on, I've got some sheets in the background. Yeah. So I'm building my own strategies here. So if you and I want to, talk about this, like I'll share, what I'm doing here. So this is one of my core strategies. So short-term leaps. and I've got to do some additional testing on this one. This is omni spreads and then a split spread. So I'm gonna do this in a couple different varieties, different underlines, and just see. And look, I've been trading this way for many years, but to go back to like 2006, 7, 8, get all that extra data, to me that is even more to like help me validate the strategy and understand that we've not had perfect markets, right? We've had pullbacks, we've had bear markets, we've had sideways markets, but I'm just looking to see this just by mechanics. What's the edge, right? What's my probability? What's my win? If I make money, it just helps me build confidence that this trade over the long run is going to work. And I know that we could have high volatility and low volatility. Obviously, I feel a little bit more comfortable if I can find omnidirectional trades, which is I'm going both directions and carve out profits that way. But those also, if you did that, like let's just talk about like the strangle for a second. If I were to, every instrument that I traded, if price is right here, okay, and I sell a call and I sell a put, and I did that every single time. Well, most of the time, okay, price stays within an expected range and strangles are great. You make money because you're selling this call, you make money because you're selling this put. But what I don't like is this bullish bias that the market tends to have, this positive drift that the market tends to have. It actually makes this about a 30 to 40% probability that this gets tested. Okay. This is like a 15 to 20% probability of getting tested. If you wanted the highest probability profit, just stick with the bullish bias. Stay out of the way. Let the market positively drift higher. So I know you can collect more premium up here, but if I'm getting this tested all the time and I've got to move and repair and get out of the way, I hate doing that because essentially it's going to force me to close out for a loss and then reposition and then try to get a win. So this is a win, but this can be tested. I mean, again, it's not high probability, like, okay, 30% of the time. Well, most of the time it's not getting tested, but when it does, I hate it. I don't want it to get tested. So I'd rather, collect a little bit less income on the sell side as an option trader, but trade higher probabilities and just trade more underlines. That's my approach at least. So anyway,
so selling more puts as opposed to selling one put, one call, and trying to strangle it.
Correct. Yep. And I've looked at strangles on all these underlines, on futures, on indexes, and they're great until they're tested. And then
something I forgot to tell you this week. The only trade that worked out for me, I had calls which were 1 day out and puts too, and they just expired worthless. But the only trade that worked out was that that synthetic strangle that you were talking about. I did on the SPX. And price had some wild moves intraday, but honestly, each day it kind of comes back to break even or close. So it never moved enough. And so those options were worthless as well, but I was on the sell side, so I collected the premium.
Yep.
Which was nice. But it seems to be that unless you're trading intraday, if you want to buy a call either 1 day out or 0 DTE, they end up moving really fast in your favor if you're looking at a chart and just trying to scalp. But the odds of it continuing in one direction is pretty bad. So I think they can work out, but if you're fine day trading, or if your broker will allow it, I think it's a viable option for this current market right now. But if you're in it for like a whole day or for 2 whole days, you kind of have to expect that your option's going to be worthless. So doing that iron condor trade, but instead of hoping on volatility, betting on
nothing happening.
On no price action at the end of the day.
Yep.
That was the best play.
Yep. And so this is the trade this morning. I centered it around 54.80 and I went up to, so if I'm going to do this, like basically it's a strangle. I call it synthetic because I'm still going to spread it because I don't have, for one account, I'm not putting $500,000 at risk with a naked strangle on the SPX. But you collect a lot of credit up front if you do $20 wide on the spread. So like I said, it was at 54.80 this morning. I went to the 55.05, so I did 25 points up above. and I did 25 points, actually 20 points down below, because I essentially did it delta neutral. I did a 15 delta roughly. So it was like a 13 or 15 delta, and then I did 20 points wide in the spread. So it was a 55.05 on the upside, a 54.60 on the downside. That was trading at 345 this morning. 935, 940 this morning. The credit collected was 345. It's already up 80 cents. Okay. Now, if you do the math on that, what's 80 cents divided by the credit that you took? So we'll go 280. So 345, let's say minus 60 cents, or divided by 60 cents rather. So 3.45 divided by 0.60. You're collecting, come on, 0.6 divided by 3.75. You're collecting about 16% profit already. 15% is what I'm looking for on these trades. So profit's already been hit. I needed a debit around 290, 295. Grab your 45, 50 bucks. It's a win. That is now 9 out of 10 trades in the last 2 weeks. So 1, 2, 3, 4, 5, 6, 7, 8, 9 out of 10 trades with this intraday SPX.
Nice.
So it works. And again, it's 1041. So this strategy it's not like something you sit on all day, and I'm not interested in recentering and starting this trade again. I think that's a little greedy to take the trade and be like, okay, I took my 15%, now I redo it. It does show in the long run. I mean, Tasty did a great study of this for like 0DT SPX for over a year. It did show that recentering and like taking your profit recentering does make you more money. Problem is, still brings you into risk. And if you have to wait till the end of the day, there's a lot more gamma risk at the end of the day. So I look at it this way. If the trade works and you're done trading in, an hour and a half, and you grab 45, 50 bucks, it adds up, man. It adds up fast. Throw an extra $200-300 in your account every week. It takes about $1,500 to $1,600, $1,700 of buying power. It's a really good strategy. So anyway, it's fun.
Yeah.
I've been tracking it. It's proving pretty worthwhile, lucrative. But also in a way for the traders that like to trade every single day, it gives you something to do. Not that that's a reason to trade. It certainly is not. But it's a viable strategy for at least some daily income. And I know a lot of traders they find that appealing. So good stuff.
I want to ask you another thing. A couple questions.
Okay.
So Micron had earnings.
Yes, they did.
Night,
yes, they
and
did.
They blew it out of the water. And they
I would not have guessed that by the price action.
So they have also their 2025 orders, their sales, were basically booked. They're sold out for the next year, meaning like they have their next earnings reports covered through 2025. So I'm wondering, why did it fall today? And what do you think of this NVIDIA play overall? Because this is a big, I guess this is big news for the chip companies. What do you think is I guess a viable option for NVIDIA? Because this has not moved all week. It had this dip Monday, then came back up and has not I guess completed this move. So I'm wondering what do you think of this, and why is it not moving, and why is the market still trending higher, even if it's not moving that much?
Well, I do think there's a realistic amount of rotation happening out of NVIDIA into other stocks. I mean, if we look at let's take a look at the heat map for the week. If we go FinViz, let's look at this week's performance. I go back to Simply Wall Street. So this is Micron. I mean, NVIDIA is facing the same thing. Look, there's a lot of profits being made and a lot of profits being taken in some of these semiconductors and chip stocks. It's crazy. Like NVIDIA has made millionaires, probably billionaires for a lot of people. NVIDIA has been single-handedly the biggest contributor to the S&P's gains this year. I mean, I want to say close to 30+% of the gains this year have been because of NVIDIA, and you throw in Apple and Microsoft, that's essentially the entire gain this year. I would say that majority of your gains this year to lead to a 15-16% start at this point of the year, most of that, not most of it, but 30 to 40% of the gains have been
So you're
because
saying
of.
the volatility is going to be low for NVIDIA now?
No, not at all. I mean, I think NVIDIA, look, it's going to be, I hope that it's just not, I hope it's not crazy volatile because it's like number 1, 2, and 3 in the world. I mean, if you take a stock that's pushing $3+ trillion in market cap and you make it trade like, it's up to 140, it's down to 118, it's up to 150, it's down to 100. If it's crashing to $70 or $80, it is going to wreak havoc on everyone's like holdings, right? It's way too influential now because it's so large. So if there's rotation out of it, I could just see a pause, right? I could see maybe people are peeling back. I read something about like a tech fund that was going to do a heavy amount of weighting in NVIDIA. They were basically going like 20% holdings in NVIDIA, and they swapped it out with like Apple and a few others. So it's, I mean, for a firm that's like, we're all in NVIDIA. Okay, great, but that also could bite you in the butt if there's a lot of volatility ahead. If there's a lot of profit taking, and NVIDIA has what I think is a necessary correction, and also record amounts of inside selling. Same thing I see here. This is the only risk that I see here for Micron, right? Earnings forecast to grow 80% a year. Okay, it's all these chip stocks, by the way, these semiconductors are probably trading overvalued more than likely. Okay, current price is 142 on Micron. The fair value is $40. Okay. NVIDIA is the same thing. They're overvalued. You're paying for this future performance and this future guidance, which in a way it's justified. But if you look at what's happening outside of NVIDIA, look, you've got Tesla that's getting into the semiconductor space. You've got Apple that's getting into the semiconductor space. These are technologies in disruptors that if they're grabbing onto something in this space, I ask you this. Do you think that Apple has the capability to make a chip that performs better than what NVIDIA has at market right now? Yes or no?
No.
No? You don't think Apple's going to make a better chip than what NVIDIA has?
No.
Is NVIDIA that cutting edge? I just think NVIDIA is in a position where they have a head start. Tesla is trying to make chips, or they're using chips now that are better performing than NVIDIA. So competition, right? It's like NVIDIA has a head start, but there's competition. Yeah.
I didn't hear about Tesla making better chips than NVIDIA, but I don't know. What I see is, for NVIDIA, they all the analysts on CNBC, no one says anything bad. They're all just talking it up. I'm not really sure why. And even despite its run up, it looks super overvalued, except they say the EPS is only like 40 something, and or forward EPS is 40 something, whereas Cisco's was 196 back in the .com bubble. So it was
right.
It's a completely different story. So NVIDIA is still undervalued according to them, and that it can still run substantially until you see any signs of being overvalued. But I don't know how. So what was its forward EPS then back when it was, say, below $100, like 6 months ago or something?
I have no idea. idea.
That's what's confusing. Was it just such a cheap company back then?
Possibly. I mean, the last 20 years, NVIDIA, I think the last 15 years, NVIDIA has been like one of the top performing stocks, but really that ballooned and exponentially gained in the last like 3 or 4 years. NVIDIA just kind of came out of nowhere, but because it's had such drastic gains in the last 3, 4, 5 years, it's now emerged rather, as one of the top performing stocks ever. Like, it actually challenged. I mean, everyone said like, "Oh, Bitcoin's the greatest asset ever." Well, NVIDIA put it to the test, because if you take that track record of X amount of years back, the last 5 years, NVIDIA's number one. Last 10 years, NVIDIA's number one. I want to see go back over 15 years, NVIDIA's number one. But a lot of those gains happened within the last 3, 4 years because it's been exponential. I mean, Frank, it became the number one market cap in the world. Out of nowhere. I mean, dude, I remember last year I was looking at NVIDIA at $400 thinking like, okay, I want to short this now. At $500, I think I want to short this now. Once I got burned twice on that, I'm like, I'm just not going to short NVIDIA. That was easy. That was the easiest decision ever, just to get out of my way, let the thing blow through the highs. So, I mean, to your question, look, I think that there's decent amounts of rotation. What I find interesting right here on this heat map is this is going back for the last week's performance. NVIDIA's down, AVGO's down, Qualcomm's down, Micron's down. So be it. Semiconductors, freaking good. There's other stuff out there to trade. This is, Intuit. This is Salesforce. We got Apple. Okay, you got Microsoft, Apple. So NVIDIA, number one in the world, shed, $300 billion in market cap. What's Microsoft? Number one in the world. It's up 2.2%. Apple, second, third in the world. It's up 1.96%. These are still keeping everything as is. That's why the market's not dipping and dropping. Google, no slouch, right? Google's up 5%. Amazon had big news with Rivian yesterday. It's up to fresh highs. I'm long. I've got some great trades running on Amazon. I got like a 160 call on Amazon that's currently up like $40. So yeah, I'm like, there's other stuff out there to trade. And Meta's up there. Netflix is creeping up the new highs. Tesla's ripping up here. There's a lot of good stuff happening. So there's enough elsewhere to not just be like, oh, it's all semiconductors or bust. It's not. So NVIDIA, look, I'm happy that a stock that's that big and that influential can have a 5% pullback and still not tank the friggin' market. I mean, if you think about it, NVIDIA was down almost 20%, and we still had less than a 2% dip in the market this last week, right? I mean, what's our? Let's go back to the SPX here. Oops. Let's go back to SPX. If we go back to the SPX and we go from this recent high when we tapped out at 5,500, what's our pullback?
It was 1%.
Yeah, you're talking exactly 1%. And the largest company in the world almost had a 20% pullback. So thankfully, there's other stuff to kind of help stabilize the market. And that is why people will probably argue this, as they should. I heard this saying, I never heard this one. I don't want to mess it up. I'll figure it out. It was something like, if you die, whoever has the most SPY, I don't know what it is. I'm going to butcher it, but something where it's like basically just if you own the SPY and you have the most SPY, you win. Something like that. Because it's been true. Like, it doesn't matter how long you look back, this market found a way to get through a lot of crap.
But even to that point, you even said earlier, NVIDIA was a contributor to most of the S&P's gains.
It was.
So
yeah,
and that was this year was what we're talking about.
Yep.
So if NVIDIA sees a harsh pullback, say it gives back everything from this year, would that not? I feel like all of the gains that the S&P made as a result of NVIDIA, the S&P would correct just as much.
I disagree. I just as much. You think NVIDIA has a 50% pullback and the stock market is going to dip the same amount? No way, dude.
No, I'm saying that.
But you're saying like contributor wise that it would give back some of those NVIDIA gains is what you're saying?
Yeah, they won't move the same percentage wise, but S&P moved up however much percent this year. It's less than
about
NVIDIA.
15. Yeah, it's like 15, 16%. So proportionally is what you're saying.
Yeah, if NVIDIA crashed 50%, then that would be like a 7-8% correction on the S&P.
Yeah, and it's true, right? But you have to remember that it's NVIDIA's an influencer, but if there's right now rotation out of NVIDIA for whatever reason, insider selling, tactical management, rebalancing portfolios. I mean, look, quarterly, monthly, rebalancing happens all over the world. If you're getting all these gains from NVIDIA and you want to rebalance to a more like balanced portfolio, then you dump NVIDIA or rebalance it so it's no longer a huge portion of your gains. And so if NVIDIA for your portfolio is let's say a 1% stake, well, now your gains have given you most of your gains this year all because of NVIDIA. Well, you just scale it back to have a 1% balance again, whatever that looks like. And so it's not as influenced by NVIDIA's pullbacks. And so there could be a full-on rotation away from semiconductors because they've had a good run. I would say if you're a smart tactical asset trader or tactical management trader, you get out of what's overvalued and you get into what's fair value or undervalued. That is rebalancing. That happens all the time. You know, it's going to I mean, it should be happening with funds. It should be happening with institutional money. It should be happening with financial advisors in some capacity. Get out of
So the
what's
consensus,
bloated and get
the
into stuff
consensus is
that's valued.
that it's overvalued. So that's the confusing part, because no one says it's overvalued.
I agree, but you know, you can say it's not overvalued, but also, what stock in the history of stocks always goes up and never comes down?
What
None.
stock in the I mean,
None. They all come down. And if you have a stock that goes up exponentially with no sign of stopping, that usually does not end with just, oh, it just paused for a little bit. I mean, this is as crazy of a run as we've seen in years, but when it is up, and I think we did this on, you know, Monday maybe, or Tuesday. If this is a 1, 2, 3, 4, 5, from a technical standpoint, all I'm looking for is NVIDIA just to come down and just have a little freaking breather, and then we'll see if this is going to resume, right? If it pulls back and tests a 50-period moving average, or comes back and tests a trend line, or comes back and tests a pocket or demand anywhere that is just reality, then sure, we can resume the uptrend. But I've never ever seen a chart that goes up and has never pulled back or never come back down. Now, it may not come all the way back down. That's insane. That would be a horrible instrument to trade, right? That's pretty much Bitcoin minus maybe about 20% of that. But if you go up like this, you're going to have a pullback. You go up like this, you're probably going to have a pullback. I mean, good example would be Cocoa Futures. Is that CC? Yeah. Even this, that could do no wrong, was up, you know, 1,000% or 400%. What was that? That was a rip of over 200%, almost 200%. It pulled back. You could do no wrong in Cocoa. It doesn't matter, dude. It's like, it doesn't matter what the instrument is. Nothing in these markets, if there is supply and demand and there's liquidity, nothing goes up forever. NVIDIA has had a heck of a run. One of the best we've seen in a long time. People should be lucky that the market latched on to AI and latched on to Mag 7 and latched on to tech, because it seems like without it, this market would be trash. If it wasn't for the Mag 7, we wouldn't have survived 2022 after a pullback, right? 2023 came out swinging with like tech recovery. Okay, then it became about the concentration of Mag 7. Mag 7 became too overweight. Then it became the Mag 4. Then it became the Fab 3. Okay, it's like all we're looking at is somehow this market keeps justifying higher highs. And I don't know all the intricacies in it, but I would know that if I look back for 70, 80 years, we've survived wars, recessions, high and low volatility periods. It still finds a way to go higher. So, you know, that's my bias. That's my bullish bias. I like pullbacks. I want to see dips. I want to see corrections because I want to buy things cheaper. But NVIDIA is not like the end all be all. I mean, honestly, Frank, if I never traded NVIDIA for the next 10 years, like, I don't really care because there's other stuff I can trade. But it does feel like NVIDIA is just the classic FOMO. What do you do that it's pulling back? What's it going to do? Is it going to crash the whole market? No. You know, it's like, it's just a stock, dude. So I feel I think NVIDIA is good, but it's not. I mean, nobody needs to hold 100% NVIDIA. I mean,
it wouldn't crash the market. It's just if it
but it's gonna weigh on it.
Yeah, it's got to. And so I guess the fact that NVIDIA hasn't moved, and then you have the other Fab 3 stocks pushing higher.
Sure.
That's what's going to carry us. But okay, so that the one day in this week, I think it was Monday, when everything was down except for the Dow.
Yeah.
That was the start of this sort of rotation. Or
agree.
What do you think? Are we moving away from, I guess, these large cap tech stocks and going into stuff like staples?
Well, I don't know if we're going that defensive, but let's look at the broad market right here. So right now, at a glance, we are showing that we have we're having a lot of stocks that are kind of split right on, and this is an important spot. Let me see if I can get. I wish I could customize this. So we have about 61% of the stock market advancing. That's market breadth. That's a good thing. We have about 61% making new highs. That's a good thing. We are 50-50 right now. So 49% is sitting above the 50-period moving average and 51% below. this is going to be a really good indicator. Let me change the color here. This would be a good indicator to see. So this is broad market. This is market breadth. That's good. This is market breadth. That's good. If we start to see that this gets, let's say, greater than 51%, and we're back above the 50, that means that what we just had here, Frank, is we had stocks that were in a buy zone. So that means that let's say this is the 200. Okay. And then we had a 50 period. What this shows is that if we start to see this SMA 50 advance, that means that stocks that have had a correction that are in between the 50 and the 200, if they get back above this, that is a bottom and a resumption of an uptrend, because we're still in a buy zone. Look at this, 62%, 62.5% are greater than the 200 moving average. So we're still in a buy zone broad market. Getting a dip below the 50, great. But if we get back above the 50, that's a classic pullback technical indicator. We dip below the 50, we close back above it. We're still in a buy zone overall, resuming the uptrend. You're looking for some market breadth. That, I think, is a good thing. That's a healthy sign of the overall market that can stabilize. Like, it's not just top 3 friggin' stocks. It's probably the stuff that's been underperforming, or the things that are actually available at fair market where there's a rotation into that. So is it rotation into more ETFs? Maybe. Look, if the broad market rallies, does the S&P typically gain? If you had like 40, 50, 60, 70% of the stocks advancing, let's say 50 to 60% advancing, S&P is going to go higher, right? The NASDAQ, if you got 100 stocks and you have 67% of those advancing, Qs are going to go higher. Like, collectively, I mean, it's not all NVIDIA. It's not all, 3, but it's high concentration. But even at the highest concentration that we've seen in like 30 years, it's only 21% of the S&P, right? So you still have 80% of the stocks that can still make up and step up and friggin' move. So there's still a big, big portion that's just, if it just performs okay, but it's broad market up. It can be a melt up. It can be a low drift. But as long as nothing is crashing, you still have 80% weighted out there with all these other stocks, with basically 495 stocks. You can have the broader market still lift and carry the torch in place of this. Yes, we were carried a long ways and probably overstretched by the Mag 7 and the Fab 3, but now it's time for maybe the broader market to step up and see what is undervalued to maybe have a chance to run. So I mean, right now it's like, I am interested to see if the Dow plays catch up. I wonder if the Dow is gonna pick up the slack and maybe get back up to these highs at 40,000 again. So the Dow at 400, or the US 30 at 40,000. If we get back to 40,000, that's kind of exciting. It actually, because we had all-time highs. This was what was crazy, right? We had a big pullback on the Dow, but we had all-time highs in the Qs and the SPY. Well, if right now the Dow's catching back up and the SPY and the Qs are staying sideways, everything's kind of collectively near those highs again, and we see, can they keep going? The one thing that's still lagging behind would be your Russell. If you go to the Russell, we're still way off, right? I mean, we're 15, 16% from these highs. I'm curious, that would be the big catch up this year. That's 21%. If the Russell gains to all-time highs, the Russell 2000 as a broad market small cap index, if it goes higher, this is an index that has 21% upside just to revisit all-time highs. Nobody knows where all-time highs can go. This is a catch-up trade, exactly, right? And there's 2,000 stocks. It's not 100. It's not 30. It's not 500. It's 2,000 stocks, right? If you trade the VTI, the VTI is the total stock market globally. That's 3,000 stocks. It's at all-time highs. So there are things that are still moving, and it's not just 3. So I guess our summarize the conversation, it would be something else can step up. And in this case, you have thousands of stocks that can step up a little bit. You have hundreds of stocks that can step up a little bit. And that's enough to say, okay, thank you, NVIDIA. Thank you, Microsoft. Thank you, Apple. We've got some other stocks that are able to perform. And maybe consensus-wise, margin-wise, fundamentally, they look okay. So I could see that, there's some rotation out of heavy concentration, maybe getting a little bit broader. You had mentioned staples or utilities or financials. There's certainly defensive stocks you can get into if you're worried. But I also think that it's going to underperform. If you get into defensive stuff now, I think it's going to underperform. I would say I'm way more cautious going into Q4 in November, December, because I think that's the make or break for this market. I think this bull market to be sustained, we have to have a good Q4. Because if the election is enough drama to bring the markets down, having a bad Q4 is going to put a real damper going into 2025. So for me, I'm looking at it this way. I think we have a good solid runway for this to drift, to stay sideways, to go higher through probably August, right? September historically is a down market because it's tax loss harvesting and it's a September effect post-summer. But usually, I mean, Frank, in the next 2 weeks, historically, it's the most bullish time in the market. The first 2 weeks of July are the most bullish in the market historically. Doesn't mean it has to be high volume. It's just like, but there's no bear usually in early July. So I think we can trade fairly bullish, fairly aggressively through end of July into August. Then I'm playing a lot more defense. You know, I obviously I'm as curious as everybody else. Like, where's where price is going to be with the election? I don't know. If they're higher, cool. We survived drama. If we're lower, okay. I'm definitely playing defense and going into a bad Q4. Q1 of next year doesn't look great. I mean, then we can start talking about getting some gains. We've had a good run, but man, reality could be a real pain in the butt, similar to 2022. We don't know. That's why I'm long the end, just in case.
That's definitely some interesting stuff.
Yeah.
I'm with you. I guess I don't have a bias right now because I am pretty bearish, but I'm not selling necessarily.
Yeah.
Because there's no point in selling against this trend. But yeah, we go into these next few weeks and we see more upside. Yeah. So what? Like, we're gonna see the likelihood of seeing higher levels is very probable. But
Sure.
going forward, I think that the hype of what the Fed is going to do is going to carry us to the hype of that one interest rate cut. That's pretty. I don't agree with it, but I think it's going to be a political move. I think they're going to cut, suggest that rates are coming down. It's better than ever, or this is the time to start looking at buying a house again and start spending more money and stuff like that.
Exactly.
It's not going to help us. It's just going to be a selfish move, I think, from a presidential.
I think it's optically what the consumer is needing and looking for. I think it's certainly even though the Fed is not supposed to be political, I think it is a political thing to allow the American people to feel that if you've been waiting because interest rates are too high and you're looking to get a house, sure, one cut does not change that, right? I mean, if we have a cut in September and I go to the bank and I'm like, okay, finally, I'd like to close on a house, and like, your interest rate is 6.75%. You're like, oh, wait, what? Yeah, because it was 7%. I mean, it's not that big of a deal.
Yeah,
and
it's not going to be any better. It's just
right.
It's
just like I said, it's the optics of it can start. So and we go out to the end of the next year. We're only looking at if the Fed truly stays on some type of consistent cutting cycle, we're only looking at like a 1 to 1.5% cut cycle through the end of 2025. Now, what they still need to see is inflation trending lower. Now, again, as we know, 3.4% sticky is not nearly far enough or not nearly close enough to 2%. I mean, I think the Fed would love, especially to justify a rate cut, I think the Fed would love to start seeing year over year get under 3%. It's not under 2, but if we were under 3%, I think that would say, okay, we can go from 5.25, 5.5 down 25 basis points.
Right.
I mean, restrictive wise, it's like if we're sitting 1.5 to 2% above, the actual like inflation rate, I mean, that's considered restrictive, but I think it's just so dumb. Like every month, dude, it's like, what's the Fed going to do? It's like probably nothing, right? The economy, and think about this, the economy isn't always running hot. I mean, usually we just have the economy humming along, nothing. I mean, it's like we don't have 6, 7, 8% GDP. We have like 1 to 2% GDP. So even staying in that ballpark, it's like we're just humming along. I don't know what we expect. I think we just expect like, I mean, the U.S. is never going to deliver China numbers where we had like 6, 7, 8% GDP every friggin' quarter. It's just not happening that way. China's been super quiet. I'm not bummed about some of the China plays, but like I am disappointed that there's no follow through. I looked at the HSI this morning. We have a pullback that since we had the top here in May, we have not come anywhere close. But again, I'm watching this closely because this low, this would be a double bottom pattern. If we go here, we go here. This is just up, hopefully a correction, and then maybe a little bit of global love. I still like China. I think that China right now is hated quite a bit as far as you can't invest in China. It's uninvestable. To me, it's a value play. It's asymmetrical, which is hard to find. And so, look, I'll trade with options. I could be wrong. I could take some heat, but it's all calculated risk. I mean, I've got maybe 3% exposure in China. But if I'm right on China, my 3% exposure could probably give me 8 to 10% of my portfolio, maybe more. I'm just trying to be patient, trying to give myself enough time to be right. So I do have some ownership. I've got some brackets and some collar trades, but right here, if we stabilize, I mean, this is Baidu, and I'm just waiting, man. I mean, maybe Baidu is going to be a double bottom at $80. Great. Well, I'm going to take some stabs at it, Frank. I'll be down here. I'll take some stabs at it. If I'm right, $80 to 160. I don't know a lot of stocks right now or a lot of indexes I can look at that are going to offer me 100%. That looks pretty good, right? This play looks good. It's just a trade. If I put 2% on this trade and I can make 4%, great. How do I do that? By having a little bit of leverage with options and playing it out long enough. So anyway, there's good trades. I'm still liking the diversification that I have, but I'm as curious as everybody else what happens next. If you and I knew what was going to happen, then guess where all of our money's going to be and what happens next. Russ is asking me, are buying the yen now? I am, but I'm not buying it in currencies. I'm not trading Forex with the yen crosses. I took a tiny trade today in the Swiss yen. It's nothing, right? The Swiss yen, I took a stab at today, 179 or 178.98. I took a stab. I put a stop loss at 180.50. But the way I am actually starting to participate in a little bit of Japanese yen is this index. This is a ETF that trades Japanese yen. This is the FXY. I bought this at $58.60. So I'm down about $1. Big deal. I'm going to start dipping my toe in this trade right here. And sure, if the dollar yen rips to 165 or 170, I'm going to be in a drawdown. But my, let's say, $500 to $1,000 drawdown is way more manageable than being down 500 to 1,000 pips in a Forex account unless I'm trading it super, super small. So I can test the waters here. I'm not getting charged negative swap. So I'm going to start dipping right now in the Japanese yen with FXY. And that way I can trade this. I can also trade it with options. So anyway, that's how I'm doing it. Am I bullish Japanese yen in the short term? Not really. I hate the yen. I said it yesterday on the show. I absolutely hate the yen. It is one of the dumbest currency pairs and baskets to trade because it doesn't respond technically the way you think it should, and that drives me crazy. If you want to trade the yen, never fight what you see. If you see a trend, stay with the trend. Wait for a confirmation break to give you a reversal pattern, then you trade it. If you want to trade early in the yen, there are victims for decades of how many people have been killed by the yen. And, natural gas is supposed to be the widowmaker. Well, if you're a Forex trader, the Japanese yen is, the make or break. So it's never good. Frank, you trade in the yen? Do you care about the yen?
No. I don't trust BOJ because I've traded currencies in the past.
Yep.
But I don't follow currencies as much as I do now just because of what's going on in America with brokerage accounts getting canceled. I had two funded accounts where you had to pass to get the funds.
Yep.
And they said that they're no longer doing US clients. So I
know it's all a bunch of garbage, man. I mean, and we talked about brokers earlier. It's like I said, just be careful on the prop stuff. I mean, the nice thing about prop stuff is it's not necessarily your money, but when you're paying to play to get into the prop firm, you're paying to play to get access to those accounts, whatever it is, $10,000, $20,000, $50,000. You're putting in money. You're trying to trade and show like, hey, I can keep a profit, and then you want to get paid on those profits. But I know it was a big disruption.
The validity of those prop firms, I started getting very speculative of, because there was one time I think I took a total of 7 tests. I passed 2 of them, and one of them, when it basically canceled the account, I was still able to trade. So it was like a demo account I was trading on, which is
Okay.
weird because if it's real money, it's supposed to be real money, the like real funds you're trading with. So it
Right.
seemed that they were, I guess they could be collecting funds through everyone's purchase of a trial account, and everyone's trading on a demo, and whatever
Dude, it's
payout
like
you
it's kind of a Ponzi, bro. I mean, if you're trading demos, it's like new money comes in from prop. It's like this person made money, so we'll pay them. You know why? Because most traders lose money. So if it's a Ponzi scheme, like, yeah, it's freaking shady. Maybe I mean, again, hopefully prop firms aren't like, who's this guy? I mean, sounds like it is. If you're trading demo, how the hell are they going to pay you real money if you're not actually trading real money? You know? So if
I
it's a
think
demo feed, it's a little sketchy, dude.
they just pay you with the money that's coming in from different tests that people are
Right.
purchasing.
So what does that sound like?
Yeah, which is a Ponzi scheme. But
Exactly.
I'm not sure if all prop firms are doing that. I noticed it for one. So it is weird, but I think now I'm more focused on, dollar related assets. I've always liked the stock market. I like trading the indices. Um, I just I wish there was less regulation on my account though versus
Yeah.
these Forex brokers where I could take a trade and be out in like 15 minutes if I wanted to.
I
And
know.
there'd be no consequence. But here, even if I'm up and I'm feeling good about the trade, I hesitate to get out because you hit
Day trade.
the day trade flag and then
Yep.
you're done for, which is I don't know. There's just so many things that are just not the same anymore. So I don't really look at currencies. I honestly am thinking about not really focusing on trading as much and just building a long-term account and just buying stuff. Just buying stuff that I like and not
And
really
never looking
focusing
at
on the
never
trades.
looking at it. Well, look, dude, for well, I mean, my style in trading Forex is I invest. I mean, I will wait for daily, weekly patterns to set up, buy extremely low, sell extremely high, build positions, have a good technical just like rationale of why I want to hold the trade. And I mean, so example, and I've done this for the last year. This is a broken record for most traders that follow me, but dollar Swiss is a good example. Okay. I love the technicals on the dollar Swiss. And, you know, I might be wrong right now calling this as a head and shoulders. Okay. But if this is a head and shoulders, it looks like a pretty good textbook head and shoulders. And right now, I'm just waiting to see if and when this actually sets up with the right shoulder. These patterns in the Forex market as a technically obedient market are pretty much self-fulfilling. So if this is a pullback area and this thing pushes to symmetry, that is a trade that I can make a ridiculous amount of profit on. So when I have trades like this, and this has been about the Swiss basket, this is one of my big, like, this is my modus operandi for the Swiss, is like my Forex trading is mostly heavily focused on getting carry, positive swap, and being long against the Swiss because it's I'm going to try to double my account, right? And that's not me using a ton of leverage. That's me picking certain levels, trading small, building up, willing to take a 5 or 10% risk and having 2-3 times the upside, and I can add to my winning positions. All right. This isn't easy because it takes me months. I've been in this trade for over a year, but it doesn't cost me anything other than some P&L fluctuation. I'm getting paid to hold this position. The technicals, you're looking at the Swiss franc that for the last 3-4 years has been at the strongest levels we've seen in 20 or 30 years. There's not that many retail price fees that go back 20, 30 years, right? So, I mean, I look at it as it's a good investment. I'm getting paid to hold the trades. There's good technicals on these positions. I can measure all these moves. So as a Forex trader, dude, I don't care if I'm waiting 2 years to hold this trade. If this 2 years pays me 50%, pays me 100%, annualize it. Okay, so I just invested and made 100% in 2 years. Well, it's a 50% return every single year that I've been holding this. That's how I trade Forex. Sometimes, I mean, and it's not always that. It's like, but if I did that and I could turn 20, 25%, 30% of my accounts, annualize it. Am I beating the benchmarks? Sure. Am I taking a ton of risk? Typically, no. It's all very controlled. So, I mean, don't knock Forex because it does work, but I am very patient and long term when it comes to Forex trading. I hate Forex scalping. I hate Forex day trading. It is impossible to me because I don't want to get up at 2 a.m. to trade Forex, right? I don't want to trade the London session when I should be sleeping and having a normal friggin' sleep cycle. I did that stuff. When I first started trading Forex, I was up every day, 2 a.m. Eastern time, and trading until like noon. I had a 10-hour window. That's all I did was grind from like 2 a.m. to 12. It's exhausting. I did that for 2 years, and I'm like, I don't want to do that anymore. So I started gravitating towards higher time frames. So anyway, to your point, trade what you like, trade what you want, strategies you want. You know, I mean, for you, it's like, Frank, you're not that far away from having the account size where the pattern day trading stuff is long gone. That's what I mean, and you got to remember that too. It's like you're restricted because of certain things that have been in place for a long time. But I wouldn't be surprised, and this is a big regulation thing. But look, we have 0 DTE right now. We have the ability to trade options, stocks for nothing. I mean, you can trade a stock for free, dude. You can trade an ETF for free. You can trade options for 60 to 70 cents. You can trade futures for 80 cents to $1. You have all these instruments you can trade. I wouldn't be surprised regulation wise. This is good for business, good for brokers, good for liquidity. Stop making pattern day trading rules. Maybe that's the next big thing is like all these traders with under 25K, take away that restriction and watch them trade more. That's good for brokerages. That's good for liquidity. Maybe that happens, but there's a bunch of red tape. And what's crazy is the US is way more restrictive than other countries. I mean, look what's happening. If you're in Forex or in props, no longer servicing US clients. I've been seeing it my whole career. I mean, I've had 6 brokers in 15 years of trading Forex because they just stopped servicing US clients. So it's a pretty small pick of the dodgeball team. It's like you went from 20, 30, 40 brokers to now I can pick of 2 or 3. So and they're large and they're regulated, but it's not the same as having options of where you think your money can be treated best.
It's just very annoying because when I used to trade on these brokers, on these Forex brokers, and I do like S&P futures, I was good at picking these like intraday tops, catching like a swing during the day and getting out. If you went down to like super low time frames, which I have tried, they don't really work out. But if we're looking at like a daily move where I think I know where something's going to go, especially in the stock market, I was pretty good at, picking direction. But, with options, I guess I still have that same mindset. I'm so, I take a trade, see that it's up, and then I want to get out of it when I'm happy with like 20, 30, 40% profit. And then I realize that I can't take it in the middle of the day, or that I've already taken 3. So if I take one more, I'm going to be out. And so I've been burned like so many times trading options that and if I want to get up to 25K, I don't want to keep trading as much as I am because it's not really helping me. So it's like, should I just work to build my account to where it's up to that standard, or should I just, keep trading and see if I can figure out some sort of, I don't know, some sort of groove. But for now, it's been a little painful in the options journey. I'm not going to lie, but I've been listening to you and stuff and trying to get more. No, not like that.
I'm a terrible influence.
No, I'm trying to learn more about it through you. I'm not necessarily taking these trades you are. I'm just trying to learn and figure things out. But it's been so far it's been a tough journey. It's not that I still love trading, but I also don't like losing money. And if options it's on a brink where I need to figure out whether or not I want to keep doing this or not.
Yeah, well, I'll say this on the option side, right? The ability to take off your trade when you want to take off your trade makes all the difference in the world to your strategies, right? I mean, that's why I sent you the look back thing, because if you go in and you're talking about, I mean, realistically, if you want to make consistency in options, it is about small wins and high samples. 1,000 trades at 15% wins, 1,000 trades at 20% wins. It's not about 1,000 trades at 100% wins. It's really not. Like, if you want to collect, you collect. That's why option sellers have an edge over option buyers, right? We've been what you think historically is in a good market to be a buyer, but there's still that staggering statistic of 70+% of options expire freaking worthless. That's not a good thing, right? I mean, if you're an option buyer, That's the staggering like obstacle that you're staring at. Like most options expire worthless. So sell options. Time's on your side. You want them to expire worthless. You want them to expire out of the money, and you make money. And you're not looking to collect all of it. You're looking to collect some of it, and you just do it over and over. And every good option trader that I've talked to, every good option trader that I see, every good option trader that I follow, they're all that. They are small wins, small wins, small wins, high probability, over and over again. That's what I see. And it's weird to think like, man, I'm risking $100 to make $15. It's weird, right? But the reality is, you say you're risking $100, you're rarely actually taking a $100 loss. You're usually going to risk maybe $30, $40, $50. But if you do the numbers and you look at 1,000 trades, if I win $15, and 1,000 trades, if I were to lose, $50. But if I have an 80, 85, 90% win rate, number one, I'm trading with a lot of confidence. Number two, the numbers still add up where I still make money. That zero DT stuff, I went deep in that zero DT SPX, and I found like pretty much the number. If my average day was going to win about $50, $60, I made sure that my average win, as I'm tracking it live, my wins are fine at $50 to $60. I've seen them for the last couple of weeks. It's steady, right? It only takes about an hour and a half to see that. But my losses shouldn't really stretch more than like $400 to $500, because from the win percentage, that makes it a sustainable strategy. But if you take a loss of what your max risk is, which is $1,700 in the SPX, if you take one of those losses, it takes over 30 days to make it up. That's a huge setback, dude. You can have a month of winning trades, and then you take a month out and one loss, but that's a max loss. And usually the market's not making an outlier type move. Most of the time, the market's moving within that fraction 1%, which is where we should be trading. Your options trading, like I said, I mean, I will teach you everything I can teach you in options, but I do the same thing over and over again, man. I've got, 5 core strategies that I focus on, and then I've got some extra stuff where I can do all sorts of creative things, but I have a plan. It's like, if I'm directional, here's a couple strategies. If I'm not directional, here's a couple strategies. If I'm trading volatility, here's a couple strategies. I mean, but everything I'm looking at when I do earnings, when I do everything else, this when we talk about our trades, I'm only going after like 15 to 25% most of the time. Earnings is a little bit more exciting because you can have a blowout move and you can go after, man, I just closed out for 50%. I just closed out for 100%. Those are cool. Those are exciting, but that's not the norm. The norm is you should be like living with the 15 to 25% because that's the highest probability, and be happy. And that just takes more frequency. So again, I don't want, look, and I know the frustration where, I mean, right now it's like I heard this really interesting like journey of trading, right? The first stage is darkness, where you don't know anything. You start to dabble, you start to learn. It all seems overwhelming. You're just trying to get your feet underneath you. And then you go into the second stage, which I believe is complexity, right? Where you start to add more strategies and understand more strategies. Maybe that's where you're starting to stabilize, not really lose money, but then you realize like you're trading too much or trading too many things, and you just try to go back to then the final stage, which would be simplicity. You find a way to show like what works, you've seen it work. Now it's about focusing on that and not trying to be the everything of trading everything under the sun, but focus on your core strategies, focus on what makes you confident. So, I mean, maybe right now, like you're right there, you're between like, darkness and complexity, where we just have to, I don't know, simplify it a little bit, focus on what has been working and why it's been working. And maybe the easier trades are just out there. Maybe the biggest thing for you too is duration, right? Like, honestly, and we can talk about this offline, dude, but going to like 5-day, 10-day short-term stuff, historically speaking, it's not that great. A lot of the trades I'm testing are 30, 45, 60, 90, 360 days. Like, they're bigger picture moves that I don't have to hold that long. I mean, I did leaps yesterday in this testing for the last like decade, leaps. And my average trade is only open for about 30 to 40 days. So I go out 360 days only to collect the actual income that I want within 30 to 40 days. Right. That again, that's seems very weird and doesn't make any sense. But that's what's awesome about the asset of options is like you can go out and have all these elements of options trading generate income, and you can do it regularly, like 30 to 40 days. If you're making income, that feels great. And you're doing it with like this very safe, like long-term mindset, but it just, time works in your favor when you're selling options as opposed to buying. So
That just made me think of something.
light
Long
bulb.
term, we saw what was it? Pending home sales today came in lower than expected, but it was also higher than last month. Either way, it's still negative. But we were talking
Okay.
about less people buying and nobody selling because high interest rates. I guess there's a large supply of houses that no one's buying. So
Maybe.
I don't know. Just I guess this consensus I'm thinking is that nobody wants to buy a house right now. So different from like the financial crisis where people owned many houses and were
Sure.
defaulting on all these loans. It seems that no one really wants to buy anything.
Sure.
But we see home prices unchanged. So
Right.
I'm looking at the REIT, REIT.
Yep.
On that ticker. So that's been pretty steady too. But I'm thinking at some point, and when you're talking about long term, when you're talking about duration in the trade, there's another ETF that's inverse of that, DRV. That is, I think, close to an all-time low. And every time
dude,
it
you're gonna do
bottoms
a triple leverage real estate.
well,
Oh,
what's
boy.
a single leverage real estate of REIT?
Let's go real estate bear and see if it shows up. Real estate bear. So I am not a fan. I've been burned so many, well, not so many times. I've been burned about 3 times on leverage ETFs. So 2x, 3x. Once you realize that, so the word is contango or backwardation. That just means that price is only going to work short term. If you're using those leverage instruments, you got to be spot on with timing. It's not meant to be held. So if I go real estate bear, maybe DRVV is triple. I don't know, dude. These are all triple. These are all triple leveraged. I don't see any single or double. Let me see if there's a. I'm just gonna Google search this. Is there a 1x real estate bear ETF? Let me see. ProShares inverse ETFs available. What's that?
I was just saying, there's got to be.
I'm sure there is. Oh yeah, REK.
Yeah.
Yep. So this is inverse real estate ETF list. There is DRV, which is what you said. There's SRS, which is a 2x leverage, and then there's REK, which is a single leverage. So REK right here, this is a ProShares real estate. There's your inverse. So if real estate goes down, then this is one you can be long on. Now again, you can read here mostly at the bottom. Okay. Most of these are not meant to be held longer term. Now, a single leverage, you can essentially hold a little bit longer, but all these are typically repriced sometimes every 30 days. And that's where you have like that backwardation contango, which means like there's just this reversion to it. It's always repriced against the underlying, and it freaking is sometimes impossible. The only real money I made on inverse leverage was 2020. And when oil crashed, I was long double and triple leverage oil ETFs. Like that was a great long futures in oil in 2020. Classified here, not a leverage fund. Daily rebalance, inverse exposure exposes the fund to issues compounding the path of dependency. Long-term returns of the fund are impossible to predict when compared to its beta 1 cousin IYR. For the fund, investors must monitor and rebalance their exposure whenever possible. Index undergoes annual reconstitution and quarterly review. Dude, you got to have a strong sense of direction. Strong sense of direction to trade inverse. I mean, if we're going to see a market crash, I like, SH. There's, again, I do single leverage because you can trade those with options. That's the thing is like, rather than trading a 2x, 3x, you can trade an option around a single leverage and get more, juice out of it. But I don't know. I'm really skeptical of these. Like they're good for hedging, but man, you can't hold these for more than like 1 to 3 weeks, 1 to 4 weeks
Yeah.
tops. Like it's just not great. So just be careful.
I'm not saying for now,
Yeah.
but I think looking into the future, this is something to keep in mind because
am I gonna call you Frank Burry from now on, dude? You're gonna short the housing market?
Eventually.
Eventually, okay. Yeah.
But we all know that home prices are going to come down at some point because mortgage rates are going to fall. And it could be several years from now until we see that, because I think the projection is still interest rates aren't going to hit like under 4% until 2026. So
sure.
I don't know.
If we have a crisis, they'll hit sub 4% way faster than that. If we have a recession, we'll be most likely the Fed would cut quickly under 4. I don't know. They would slash a lot of things. If we have a recession that gets pretty nasty, our rates are going from 5% to probably 2.5%.
They can't. I mean, they shouldn't do that though, because
they shouldn't. But what they shouldn't do is go to zero. That's the problem. We've gone from 4% to 0, 4% to 0, 2.5% to 0. That's what we shouldn't do. We shouldn't just keep going to 0, right? I mean, we have 0.25%, but I think that
with that we shouldn't go. That's a whole other inflationary issue. You go to zero every time. Dude. That's the Fed. The Fed should be designed for crises, but they should not step in on every little.
I know, but look at what they have done, and this is why the market is so conditioned. Where it's like we're down 1%. Where's the Fed? We're down 3%. Look at April's correction. Where's the Fed? I mean, Silicon Valley in 2022 with the regional banks. Or was it 2023? That was like that little blip on the radar in 2023. It's like that was squashed by the Fed, and understand that 2008 taught the global economy a lot. Like there are stress tests and things in place to prevent 2008 from ever happening again. Now it doesn't mean that it can rhyme, so to speak. It can be a different look, but those like circuit breakers are in place now than they weren't before. I mean, we talk about the GFC in 2008. We talk about Black Monday in 1987 or .com bubbles. It's like circuit breakers weren't as liquid and as right in your face as they are today. So again, that's not saying that we're immune to something awful happening, but the reality is it's just more liquid. There's more crap in the markets. There's more derivatives on top of derivatives on top of derivatives, and maybe it's all a big house of cards. But dude, if the market goes somewhere, I mean, I guess the worst case scenario for any investor would be like, we just go sideways, right? I mean, could you imagine staring at a 401k and you're a passive investor and you've been in a drawdown for 2 years and you're now, oh wow, my, $500,000 401k is now up to $540,000. It's been 2 years. Like that's not anything to get excited about for a passive investor outside of it's up, But for us, it's like we've seen a swing and we've seen a swing. And I just think we're the ones that are way oversensitive to what the market does most of the time, which is it just finds a way to grind. It ignores a lot of crap. And I don't know. I think it's just we overkill it because we can put so much content out there, right? And we can see this stuff. There's never a lack of data. There's always something to talk about. There's content that is overkill. But the reality is, what do you think the market's trying to do at the end of the day? The best companies in the world are trying to do better. They're trying to make more money. Corporate America is freaking greedy, man. All they want to do is improve their bottom line. And if they do that, we can invest in that. That's all the market is for, So that's why buying the SPY or buying the indexes, that's essentially what we're betting on. The best companies in the world find a way to be the top dogs. Well, if that's enough to drag the market higher, cool. We can make money doing that. Is there a reality? Sure. Maybe it's, the broad market underperforms and we have a slowdown. Okay. So what does that look like? Maybe it's sideways, right? I mean, heaven forbid trading gets boring all of a sudden. I mean, trading hasn't been boring since 2020. So that's a whole other thing. It's like everyone expects all this excitement and all this crazy volatility. It's like, I mean, why do you think I'm looking at just daily trades on the SPX when nothing happens? In 60 minutes, I can make $50. Doesn't seem like a lot. I mean, I can double down and make $100 a day if I wanted to. It's just more contracts and more risk, but it works, And until we're dealing with like crisis and high volatility, it's like, just let it do nothing. Let it do its thing. If we can make money doing it, I'm fine with that. So,
yeah,
anyway,
I'm with you. I think from, just a consumer standpoint, or just the average person, putting rates to zero and then hoping everything will be okay will not always work. And it's going to hurt, it's going to hurt us, like our generation, and after us. The inflation problem would just persist if we just kept, letting the Fed step in.
I know, man. It's not like the Fed is not the answer. I mean, there's a lot of problems out there. There's a lot of problems under the surface, which I, don't agree with. But at the end of the day, man, it's not in my control. If the Fed steps in, it's not my control. If the Fed doesn't step in, it's not my control. All I can control is what I trade, when I trade, and how big my trade sizes are. That's all I can control. So that's it, man. I figure out how to survive, try to make some money, stop complaining about stuff I can't control. Stop guessing and speculating on stuff I have no idea. Nobody has any idea, but there's still ways to make money. So after all this talk, that's really what it boils down to, is like, how stoic can we be how stoic are we about trading the markets? Can we just find a way to agree that there's ways to make money? If we can do that, then that's why we're still here. But I know that this conversation, if it gets worse, can be so frustrating where it's like, I don't care. I don't care anymore. It's too much work. It's too much this. Yeah, it's not for everybody. I get it. So anyway, but here we are.
Yeah, still trading another day.
Another day, man.
But yeah,
another day, another dollar.
It's time to get off. I'm done.
You're done, huh? All right.
Yeah,
well, thanks for your hour.
I gotta do some stuff. But,
all right, man. Well, I appreciate letting me have the extra time. Chandler and everyone else, like, I don't know what this session became other than it was fun. It was therapeutic. Felt like we get some stuff out there. We can cleanse a little bit, So, but at the end of the day, man, we just keep grinding, keep trading. So, all right, man. I appreciate the time, Frank. Thanks, everybody, and we'll talk to you all soon. Thanks, man.
Thanks, everyone.
Yep.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.